Okay. Mr. Sandman, bring me a dream. Make him the cutest that you've ever seen. Give him two lips, like something, something, and something, something. All right. Go live, go live. La la la, la la la, la la la, la la la. La la la, you have here. Come on, come on. All right, mirror, 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 magic mirror on the wall. Who's the fairest? Rolling, rolling, rolling. Keep those doggies moving. Get them on, move out, move out. All right, so no, we do not want to see that at all. Oops. Oops. There we go. Oh, bloody jolly good. Who's in the house today? Who do we have? Who do we have? Big guy, AB, Mike, Muncat, Mike, Paolo, que pasa, Paolo, Lex Diamond, Bugs Bunny, iPhone, cool, George, good evening, Shell, nice to see you again. Bob Pitts, what's going on, Bob? Rick, Jamar, what's going on? Jordan, KB, how's it going? Morty, thank you. Morty, please only do that once. Come on, Morty. Thank you. Jamar, what's going on? RJ March. Sergio, que pasa? Faiza, Eco Love. Mike Shea, good evening. Mark. Huck. Gotta love a name like Huck. Nice, strong American name. Huck. What's your name? Huck. Oh, bloody rocky then. Good evening, everyone. My name is James. This is Dividend Stock Talk. Just getting ready to get started. First and foremost, let's go over a few rules, a little bit of introductions, whatnot. And for those of you that are new here, okay, number one, my name is James. This is Dividend Stock Talk, where I invest in dividend stocks for weekly cash flow, looking for a simple, predictable, consistent 1% per week. Okay? Now, that being said, I only use dividend stocks. More specifically, pre-qualified dividend stock. Now, the way I rate a stock as being pre-qualified, well, two things. The funny thing is, only two. That's it. Two things I want for the stocks I want to take a look at. You ready? Number one, consistency of profitability. If the company's consistently profitable, I'm all in. However, I want to make sure it has weekly options available. Because weekly options, that is what allows me to have a weekly cash flow on a consistent basis. So we got some questions over here. What is that stock market or something? Absolutely, Dominion. Would you invest in Bitcoin? No, I would not. And there's a few reasons why. If you'd like to know why, just ask. Why is it I don't like Bitcoin? There's a reason. Not quite sure if you know what it is. Anna, good evening. John, Vasan, good evening. Dave Boy, what's going on? Illuminating, good evening, good evening. Why? Why isn't I don't like Bitcoin? Well, number one, it's not proven yet. Now, what do I mean by proven? Well, the U.S. dollar, as we know it, has been around since the 1940s, okay? Because after World War II, They implemented the US dollar, blah, 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 all kind of nicely fun stuff. Also, there is nothing backing Bitcoin other than the agreement between everybody else that is using Bitcoin. There's no solid anything behind it. Just a wish and a prayer. That's it. A wish and a prayer behind Bitcoin. There's no government backing it. There's no entity backing it. Okay, so who's to say that it couldn't drop tomorrow? Because there's nothing supporting it. They don't make anything. They don't produce anything. Okay, so what does Bitcoin have to offer other than an agreement between one person and another? Jam, what's happening? Hello, can we pay attention to each other? I like your videos. Thank you. Way to go, Jam. Chris M, good evening. Anna, thank you. Kent, Steve-O. So I'm hoping that answered the question, why, Kate Dominion, why I don't like Bitcoin. Okay. Dostale, good evening. Jonathan. My brother day trades. Alrighty then, good for him. I don't day trade. I'm going to get used to using the yuan or the euro. Okay, you have fun with that. Can you say Joe Z? Maybe I can. Dominion, all right, thanks for responding. You're welcome. That's just my reasoning. Now, don't get me wrong. I'm a big believer in cryptocurrency. It's just I really like to be something else behind it, backing it, other than just, people just agreeing, which could be a good thing. I don't know, because it's something new. It hasn't been around that long yet. So we don't know how everyone else is going to respond to it. All right, thanks for responding. You got it, you got it. All right. What coin would you recommend investing in? Okay, Gabriel, I don't do cryptocurrency at all. We just had a conversation. Do you provide financial advice or literacy? Yes, I do. Gerard, good evening. Kenny, Thomas, what's going on? Ed. So far, I've invested into Solana. Alrighty. Now, I can't tell you one thing or another about any cryptocurrency. Nothing. I have no input whatsoever, other than I like the idea of it. So until it is widely accepted, well, then maybe it might be something good to get into. How do I get into your dividend calendar? Well, Smitty, you don't get into my dividend calendar. You got to create your own. Now, I use Thinkorswim, and in Thinkorswim, they have a dividend calendar which you can use. So how do you find stocks with weekly options? Okay, user 105417. 105417. CBOE.com. Chicago Board of Options Exchange.com. And then right in the search bar, you want weekly optionable stocks. I'll give you all of them. Mikey, what's happening? Dominion. So what are you presenting today? Can I get a shout out? Winfield, how you doing? My ant colony would like to buy crypto to afford food, though. Way to go, one ant. The queen's always hungry. Yes, they usually are. All right, so opinion. What am I showing today? Well, I'm going to show you a trading strategy which I created for my 9-year-old daughter. It's simple, it's safe, it's predictable, it's consistent. It gains about 1% per week. Nodsgnall, ExxonMobil. Let's take a look at ExxonMobil. So as I was saying, the strategy which I'm showing you was created for my 9-year-old daughter back in 2008. Okay, 2008, she said, Daddy, what are you doing? Can you teach me? Now, out of all the things for a 9-year-old to be asking their dad, what are you doing? Oh, can you teach me? So how do you teach a 9-year-old little girl how to invest in the stock market when most adults don't even understand it? Yeah, I understand. Now, some people don't like 1% per week because they don't think it's fast enough. Well, I'm not looking for, a sprint. Okay? I'm not even looking to run. I'm not even looking to jog. I'm looking to crawl nice and slowly. 1% a week is not that difficult. It's relatively easy, as a matter of fact. And we're going to show you exactly how I do that. We're going to do a couple of samples, too. Got some more questions. 1% a week sounds a bit skeptical, honestly. Thank you, Dominion. Since you have 7 accounts, does that mean that you're making 350% a year? No, that's not what it means at all. Okay? All right. So when you got 7 different accounts and you're making 1%, well, you're making 1% because the percentage never changes the larger the number gets. Okay? So if I had like 30 million, well, 1% is still 1%. All right? So you just, you take that decimal point, move it over 2 places, and there you have it. John, I don't do Bitcoin, so I'm not the person to talk to about any cryptocurrency whatsoever. So there's somebody putting questions in the chat that aren't coming available. Well, there's a reason why they're not coming available for you. So it'll probably be a good idea for you to just stop doing that. Smitty, can your strategy work in a Roth IRA? Well, absolutely. Now, Smitty, here's the thing. In IRA, you are very limited on what kind of trading strategies you can do in your IRA. Well, a covered call is just happen to be one of those that you can. Rotarian Rich, my company offers stock purchase plans. Is this a good idea to invest in? Now, Rotarian Rich, I'm not 100% sure I understand the question. Now, sometimes companies will match whatever you put into your retirement account. Uh-oh, Jeremy, hold that thought. You're not going to like what I have to say, Jeremy. Okay, so sit tight. I will get to that question. So back to your question. Your company offers stock purchasing plans. Well, it would have to be what the details are, because depending on all your finances, how you have your finances set up will greatly influence what kind of strategy you can use. Does that make sense? Because there are a lot of different strategies. Now, do you have your trading account in your personal name, company name, a trust, a foundation? There's a lot of different ways because there's a lot of moving parts. I'm just covering the simplicity of a trading strategy that gets 1% a week. That's it. So all the other questions, you're better off talking to a trained professional. You have a question about taxes and investment strategy or investments. You need to talk to a tax strategist so you can set up your account properly first, and then find out what your company's hoops, for lack of better words, the ifs, ands, and buts. What are the limitations? What can you do? What can you not do? Okay, so it always comes down to that. It comes down to that. What can you do and what can you not do? So, Jeremy, I'm going to get to that in a minute. Someone is trying to send a question here, and it just keeps getting back. Gotcha. I thought you were making 50% per account. Yeah, but here you go. You ready? Believe in 3 and 1. You got 3 different accounts. All right, you got 7 different accounts. Let's say they all have 100,000 in it. Okay, well, 1% of 100,000 is $1,000. Well, $1,000 a week or 1% a week is still 50%. Okay, so you got account number 1. Okay, 100 grand. Account number 2, 100 grand. Account number 3. So you get all these different accounts, right? All right, so you're getting 1% here, 1% here, 1% here, 1% here, and 1% here. That is not 7%. That's still only 1%. See what I mean? Because when you increase the percentages, adding them all up, 1%, 1%, 1%, 1%, well, you also got to add in the amount of money in each one. 100,000, 200,000, 300,000, 400,000, 500,000, so on and so forth. So $7,000 coming in a week, well, that's still $7,000, but on $700,000, because each account has 100,000, that's still only 1%. So you should have paid more attention in math class, because more accounts does not mean higher rates of return. All it means is more money because it's spread out a little bit further. But it's still just 1%. So one account, 100 grand, 1%, well, that's $1,000, okay? Over the whole year, 52 weeks, well, that's 52%, give or take a penny or two, okay? 2 accounts, 100,000, 100,000. Well, now you have 200,000. You got 1,000 here, 1,000 here. Well, put together, that's 100,000 profit. Well, you're starting out with 200,000. It's still 50%. The numbers don't change. Anyway, but thank you for that. A little brain teaser. Who do we have? Jaden, how are you today? And Michelle, what's this? Michelle, what we're doing here is looking for a safe, predictable, consistent strategy to get a 1% return every single week. Okay, so the trading strategy I came up with for my 9-year-old daughter back in 2008 when she said, Daddy, what are you doing? Can you teach me? Okay, so trading strategy had to be simple, safe, predictable, consistent, and no way for her to lose. So that strategy came with some rules. Rule number 1, never buy something you don't want to hold on to long term. If you don't understand it, if you don't like it, don't buy it. If you don't understand the company, don't buy it. If you don't want to hold it to the day you die, don't buy it. It's that simple. If you buy something, it goes down and you bitch and moan, it's nobody's fault but your own. Rule number 1, never buy something you're not okay with, and never buy it if you don't understand it. Now, when I mean understand it, we're probably going to get into it a little bit later on in the evening, but you're going to find out people will buy stuff and they'll bitch and moan because it drops. Or it goes up, it goes down, it goes up, it goes down, all kinds of weird stuff. Well, if you don't like it, you shouldn't have bought it in the first place. That's rule number 1. Rule number 2, never sell at a loss. It defeats the whole program. Okay, it just doesn't make sense. Why would you buy something and then a couple months later sell it at a loss? That doesn't make sense. Rule number 3, make sure the company is consistently profitable. Now, we're going to get onto it in a little bit later on. We'll dive a little bit deeper what that means exactly, because you're going to see people here, because about anywhere between 10 to 30,000 people will come through these channels every night. So I got 7 different channels. So I get 7 different conversations going at one time. So cut me a little slack. But the thing is, you're going to see companies, and I'm going to take a look at them, and I'm going to take a look at the real numbers. Okay, not just the chart, not just these numbers, but the really questionable ones. We're going to go to a financial website and actually take a look at the real numbers. And it's enlightening. Now, the reason why I say that, because already 5 minutes into the show, we got 2 that somebody wants to take a look at, and I know them, that they're, in my humble opinion, I wouldn't invest in those with your money. Isn't that weird? I wouldn't invest with them with your money. All right, here we go, right here. That one and that one. Hold that tight. So, that being said, remember, rule 3, make sure the company's consistently profitable. Rule number 4, weekly options only. Okay, it just doesn't make sense to me to buy something that doesn't have a weekly option, because I want to get paid every single week. Terribly sorry. I grew up in a blue-collar family. We went to work 8 o'clock Monday morning. Friday was the end of the week for us. That's just the way I was brought up. So here, nowadays, well, I punch in at 9 a.m. Well, I'm only on for about an hour, but my week ends at 4 p.m. on Friday. So it's kind of the same, but I have a lot more longer lunch breaks. Anyway, and rule number 5, make sure the numbers work. Now, when I say make sure the numbers work, it means nothing to you at the moment, but as the night goes on, I will explain it in more detail, and you say, like a good movie, everything comes together in the end. So it'll make sense. And I'm going to make a promise to you right here, right now. I'm not going to try to sell you anything. Because I'm sure you're used to people coming on at night, giving you a big old pitch, say, you could do this, you could do that. No. I'm actually going to walk you through the trades, show you some stocks, show you how it all works, and I'm not going to sell you anything. Now, do I have stuff to sell? Yeah, I do. We're all adults here. We know how it works. In the bio of my website, blah, 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 all that kind of stuff. So, that being said, that's the pitch. Here we go, and let's look at some companies. Now, companies I want to look at, if you can do me a favor, only ask me to look at companies that are consistently profitable for at least 2 decades. That means 20 years, which it also means SCHD is a no. What was the other one? JEPQI is also a no. Okay, Jeremy? 20 years of profitability. SCHD, no. JEPI, no. JEPQ, no. VOO, no. Okay? Rule number 2, or number 2 indicator. Weekly options only. Okay? If it doesn't have weekly option, it's a no. If it doesn't have a dividend, it's a no. If it doesn't have 20 years of consistent profits, well, that's a no too. It's simple. Consistently profitable, weekly options. Okay? Let's see what we got. What did we come up with? Well, first on the list, what do we have? Lone Wolf. Dude, haven't seen you in a while. Thomas, do you compound your 1% on your next week? Absolutely. Thomas, hold that thought for 1 second. Let's go to here. Let's go to here, the website. Now, I'm not going to try to sell you anything. I just want to show you something you'll find rather interesting because on that question. Okay, weekly trades for 2025. So these are all the trades I made so far for 2025. Thomas, are you ready? All right, Thomas, you ready? Here we go. Account number 1, 2, 3. Now, I have 7 accounts. I only share 3 of them publicly. All right? So, beginning balance, 151. Beginning balance, 143. Beginning balance, 114. So, let's go all the way back to week number 1. You ready, Thomas? Here we go. All the way back to week number 1. Here we go, right here. All right, you ready, Thomas? Starting balance, 152. Starting balance, 143. Starting balance, 114. That's the starting balance. Okay? These are all the trades that I made this year. Now, I'm not cherry picking anything. These are all time stamped right there. Actual, all real trades, all live accounts. Okay? These are all the trades. All right? So, if you add them up, this right here, $9,341. Grand total of 6% for account 1. Okay, 2,600, account 2, 1.8%. Account 3, 4,839, 4.2%. Now, let's go to week number 2. You ready? Okay. Starting balance, 119, a little higher. Starting balance, 146, a little higher. Starting balance, 160. Okay? Week number 2, 2.3, 1.7, 1.8. Okay? Beginning balance. It increases every month because the profit that I make for the week gets added to this number and gets carried into the next week. 123, 127, 132, 137, 141, 145, so on and so on and so on. So yes, the accounts get compounded 1% every single week. Well, not really 1%, 3.75, 2.11, 4.3. So whatever rate of return I get for the week, it gets compounded and thrown into the balance. So you come all the way up to the top. Okay. All right. So at this moment in time, okay, account number 1 started out with 151. Now it's at 225. That's a 57% return so far this year. So far this year, that's it. 57%. And we're not even halfway through the year. Okay, account 2, 143. Well, now it's at 210. That's a 46% increase. Account number 3, 114. Well, now it's at 186 or 63%. Every single trade is listed there, so you can do the math yourself. Believe me, don't believe me, but the numbers are there. Everything is time-stamped. You can take a look at them, and they are real live accounts. Okay, so I hope you understood that, and I hope it works out for you. All right, Thomas? There you go. All right, user 105417. Let's get out of there. Let's get... I'm going to leave that there because I know someone's going to ask me about it later. There we go. All right. My Yahoo Finance, because that is important. There we go. All right, back to where we were. Get back. Okay, what do we have here? John Werner, good evening. Drew, hold that a second, Drew. Are newbies like me welcome? Dominion, of course. Just, write questions down. I'll answer any questions you want. Mikey, what's happening? I'll answer any questions you want, as long as it's on topic. Okay? Is there a book that describes my strategy? Smitty, would you believe, Smitty, I've written 14 books. 14. Book number 14 has everything in it. Funny thing is, I finished with book number 14 in 2024 of February, and I still haven't uploaded it yet. Terribly sorry. I'm not very good at this technological stuff. This is just a hobby for me. It's just a hobby. I'm retired. I got nothing else to do. So why not? Let's share some information. Let's all make some money. All right? So hopefully I answered your question. Paul, J-Mo, happy Thursday evening. I love Thursday evenings. It gives me a 2-day vacation. Okay, user, do you drip or take the profits? Well, I got 7 different accounts, so I use one to actually pay my bills. And the other ones, they just drip. So yeah, I do. Is there a book? Yeah, we already did that one. I want to do this. How can I start? Mindy, the best way possible, just keep listening, keep following. If you want, drop me your phone number and I'll give you a call. But remember one thing, Mindy. I don't do emails. I don't do text. I don't do WhatsApp. I don't do, what's that other one? Telegram. Okay? You want to talk to me and have a conversation? Send me a number. I'll give you a buzz. Okay? And you can ask in the chat, if I leave his number, does he really call? I'm talking about me personally. I'm not going to pawn it off for someone else to call you. I personally going to call you. And I'm going to guarantee you right here, I'm not going to try to sell you anything. Okay? I'll answer whatever questions you have. But you got to leave me your number and I'll give you a buzz. All right, Smitty, can I have the book? I'm a Patreon subscriber and I'm a little lost still. Smitty, I tell you what, you're a Patreon subscriber. Send me a personal email and you and I will do a private, what do you call those things, a Zoom class, and I'll walk you through it. Other than that, ask questions on the daily live shows. I mean, the daily live trading scenario. Okay, so what else do we have here? How has the current recession affected your predictions of investing? Okay, so Drew, the investing that I do has really nothing to do with the DTS that's going on. Okay? Or there's a TDS. TDS, yeah. Nothing to do with the TDS. Okay, I do companies that have been in business for 100 years or more. Well, think about it. Coca-Cola. Did Coca-Cola stop making Coca-Cola just because people are throwing a fit? No. Did Ford stop making cars because people are all pissy? No. Okay? Lots of stuff happens in the economy. Well, what you're seeing in the news, well, that's just small, tiny bit of what's happening. Because there's nothing happening in Florida. Everything's peaceful here. I have $350 to invest. What should I do to raise it in stock but safe? Okay, Alexia, you're new here, my dear. Or Mr. I have no idea. It's just a name. You're new here. Just sit and chill for a bit. And I want you to ask yourself just 2 or 3 questions. Number 1, does it make sense? Number 2, does it sound like something you could do? Okay. What does it mean to roll an option forward? Smitty will get that in a little bit. But right now, let's start looking at some stocks because we did pick 5 stocks at the beginning of the week. Now, we picked 5 stocks last week also. And I'm pretty sure some of you are kind of curious how the trades worked out. Because on Sunday, because I go from Sunday night, Monday night, Tuesday night, or Thursday night, so on and so forth. So every Sunday night, we pick out 5 stocks. Just so you guys can see, because you guys pick them. Okay? So you guys give me lots of stocks to take a look at, and then kind of like vote on it. If it's a good one, we'll say, good, let's write it down, let's do it. So we got 5 of them this week. What do we have? We have Kohl's, Apple, Riley, Albemarle, and Mara. Is that right? Yeah. Yep, that's the ones. So we're going to take a quick look at them and see how they did. So what do we have over here? Al, good evening. Old fat dog, what's happening? Ben, how's it going? Crazy gamblers, what's happening there? Longo, Cease, To It, Steven, Dad saying, good evening, good evening. What market are you trading? I'm using pre-qualified dividend stocks to do stock options for a safe, predictable, consistent 1% per week. That's over 50% per year in less than 10 minutes. I'm not sitting in front of my computer, okay? I make a couple of trades on Monday or Tuesday, and then just peek at them Wednesday, Thursday, Friday. They all expire on Friday. So on Friday, we take a look and say, well, what's the best thing we should do? Okay? Hopefully that makes sense. Jay, good to hear it. Eddie, what's going on? Uh-oh. What happened there? Eddie, Gabriel, Chris. All right. Okay, let's go. It's Summer Cebu. I have no idea what that means. John, good evening. Rotarian Rich, interesting, thank you. It's summer, I have no idea what that means. Francisco, hello. Drew, how is the current recession affect? It's not at all. Not a single bit. The battle of, okay, I couldn't get spot trying to sell silver. I did not sell. I don't do silver, so I can't help you out. You're talking to the wrong person. Okay, Jeremy Lynn. Weekly cash secured puts on what stocks? Well, I don't do cash secured puts as much as you think I would, because I do a balance between which one makes more sense, a cash secured put or a covered call, because they're both basically the exact same thing, Jeremy. You're taking a big chunk of change, you're putting it aside for whatever investment, or weekly or whatever, and then you're getting a return on it. So if I put 10, 15,000 aside, well, what rate of return am I getting? Whether it's a cash secured put or whether it is a covered call. And I don't do cash secured puts here. Sorry, just one strategy, that's it. SPY going to crash tomorrow? Don't know. Do I trade crypto? No, Jerry Vanderwalt, I do not. But okay, thanks for asking. Quattro Beast. Now, Quattro Beast, I don't do SPY. Okay? It just doesn't make sense to me, because to me, when I look at the numbers for the SPY, they just don't work, and they're just not consistent. So I always say what I'm looking for is simple, safe, predictable, and consistent. That's what I'm looking for. So SPY is not consistent. All right, so Dallas is in the house. Dallas Landscaping, Casey. Now, Dallas, you're new here. I can tell, because not even 5 minutes ago I said I don't want to look at anything that doesn't have 20 years. That's 2 decades. 20 years of profitability. Well, Casey's only a year and a half old, so that's a no right off the top. Jury, so I joined a bit late in the live. Can you tell me more of what you offer, a course or signal or what? Information, Jury. Okay, I'm not selling anything. Okay, what we're doing here is looking for a simple, safe, predictable, consistent way to make 1% a week using nothing but pre-qualified dividend stocks. And those are companies that are consistently profitable for more than 2 decades. Now, we checked on Sunday. There are 10,066 companies that we can invest in this week. Well, last week it was 10,043. Well, this week it's 10,066. Well, who knows how much it's going to be next week. But I do check every week. So next week we'll find out how many companies are available. So if there's over 10,000 different companies, finding a few, just a few, that's all you need, just a few good ones that have over 2 decades of consistent profitability, that can't be that difficult. Well, hope you got a pen and paper ready. Here we go. You ready? Here we go. Here we go. Here we go. List number 1, Dividend Kings. Companies that have increased their profitability for 5 decades. That's 50 years. Dividend Aristocrats, 25 years. Dividend Champions, 25 years, a little less rules. Dividend Contenders, 10 to 24 years. Yeah, 10 to 24 years. Dividend Contenders. List number 5, Warren Buffett's list, of course. If it's good enough for Warren, it's good enough for me. Now, I can't speak for you guys, but those are the lists that I use. Warren Buffett's list, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. Each and every one, 4 of those lists, okay, the dividend lists, they have plenty of consistency. That's why they're on those lists. Because out of the 10,066 different companies, well, half of those pay out dividends, sharing their profits. Well, the other half don't share their profits. They take all that money and stick it back into the company for capital growth. Now, do you understand the difference between capital growth and cash flow? Because there's a huge difference. Because a capital growth stock will take all their profits, put it back into the company to escalate the they put it back into the company to raise their stock price, to raise the value. They put all the money back into the company. They keep reinvesting. Well, on the flip side, cash flow companies, well, they take their profits and they share it with the investors. That's you and me. Okay? So that's what I like. If you're looking for capital appreciation, buying a stock and have it shoot to the roof, yeah, you're in the wrong place. That's not what I do here. I'm looking for a simple, safe, predictable, consistent way to make 1% every week. And the stocks that I use, well, you probably heard of almost every single one of them. Because remember rule number 1? Never buy something you don't understand. All right, so let's keep on going to it. Let's see if we have any more questions. Jessica wants to look at Lockheed Martin. Ooh. How good is NASDAQ and NASDAQ index? Alexia, I don't put my money there. I don't even have a good reason because I've never even looked at it because they don't produce any products. Think about it, okay? When push comes to shove, companies that produce a product that we use consistently, dish soap, shampoo, toothpaste, windshield wiper fluid, spark plugs, stuff that people use, okay? Well, it has a product. Those indexes, they don't have a product. So I don't know what to tell you there. Anyway, covered calls on what blue chip stocks. Jeremy, I just blurted out the list 2 minutes ago. Owens Corning, Bradley, you got to give me the ticker symbol. Because I know a lot of the stocks, I know there's ticker symbols of the ones that I trade frequently. So if I ask for the ticker symbol and I don't know what it is, more than likely it's going to be a no. But by all means, give me the ticker symbol. We can pull it up, we can check the numbers and see how it looks. Okay? I joined a bit like, okay, can we trade with you or how can I join you? Okay, Jury, I always tell people if you really want to chat with me, send me your number in the DM, top left corner. I believe you can click on that. I'll go right to my website and you can just send me an email or text saying, hey, this is Jury from TikTok. Here's my number. Give me a call. Let's chat. Okay? All right, so who else do we have here? All right, thoughts on KUNDT. What the heck is that? Now, just to let you know, that is never a good sign when I say something to that effect. What the heck is that? All right, well, let's take a look. KUNDT. Well, imagine that. Can't find that symbol. I'm sure somebody over there is laughing his ass off because he thinks that's funny. Thank you there, Ramel. Okay, M-O, Altria. Love Altria. I do. But I wouldn't be buying it now because look at this. Here's your low way down here. Up, down, up, down, up, down, up, down. Now she's going up. Well, what's happening right there? Here's the high of the year. So it looks like she's coming back down from that high of the year. So let's zoom in a little bit closer. Okay, what do you think? This is the last 30 days. Okay, 30-day bottom's right there. Bounces up. Got 1, 2, 3, 4, 5, 6 days to the downside. You get 1 day up. And today, well, she started higher, but then she pulled back. So is it done going down? Or is this yesterday just a glitch and it's still going to come down further? I don't know. That's not a clear sign. And look how close it is to where the high is. If the high is 61, well, we're at 60. See, 59.92 is close enough to 60 to call it 60. All right? So Altria, I'm going to say no for this week. But don't get me wrong. I love Altria. I do. I made a lot of money off of Altria this year. What is your game plan now that Israel bombed Iran? That's funny because they're on the other side of the planet. I don't really care. Isn't that weird? Somebody on the other side of the planet has nothing to do with me whatsoever. I don't have any friends in either one of those places. I have no relatives in either one of those places. It's something that has no concern of mine. So next you might be asking me, well, what about this? What about that? Don't know, don't care. Okay? There's so much going on in the world. Why is it that I should pay attention to that? Think about it. It's got nothing to do with me. Nothing to do with any of my friends, family, or relatives. Okay, so Huck, Mary. Okay, Huck, I'm not quite sure what Mary means, but is that a stock? Mary? M-A-R-R-Y. Well, it is. Imagine that. But here's the thing, Huck. Here's the thing, Huck. It has no options whatsoever, so that's going to be a no. Sorry. Exclusive Barbershop, QQC. What the heck is QQC? Well, QQC has no options also, so that's another no. Do you continue to write covered calls and draw down? Absolutely. Huck. Now, Huck, did I or did I not ask you very politely a few minutes ago? Only companies with 2 decades of profitability. Misty's not there. Not even close. Bought some shares of GPIQ monthly dividend, 42-ish, with a 10% yield. Should I keep or read? Okay, hold on, Dano. Let's pull it up. GPIQ. All right, first of all, I can't give you any advice on it only because it's something I personally wouldn't invest in. Now, the reason I say I wouldn't invest in it, I don't do monthly options because for me, they're just not profitable enough for me. Okay, and I can only do it once per month. And if I'm getting a 1 to 2% for every trade that I do, well, with this, I'm only getting 12 to 24%. Now, you're new and you might think 24% is good. Well, not me. I do weeklies. Weeklies look something like this. See? 13 June, 20 June, 27 June, 3 July, 11 July, 18 July, 25 July. These are weeklies. Means I can get 1 to 2% every week. So the question would be, do I want 1 or 2% per month, which is 12 to 24% a year? Or do I want 1 or 2% per week, which is 50 to 100% per year? Now, you may not have 5-10 minutes every single day to take care of your money. Well, some people do, some people don't. But think of it this way, okay? If you have a pet, dog, cat, or what if you have children? Do you feed them every day? Do you water them every day? Do you make sure they have clean clothes and get them off to school every day? Well, then why don't you pay attention to your money? Because I tell you what, when the kids get 18, they're out, okay? And when you're retired, guess what? Your kids have their own life, and they're no longer around. But guess what is around? Well, your money is. And I hate to sound so materialistic because I'm not. Because money is only one small portion of your life. But it's the second leading cause of divorce. Yeah. What do they call that? Disloyalty and dollars are the 2 main reasons for divorce. What tool are you using? All right, user 105417. This here is called Think or Swim. It is available through Charles Schwab. Now you can go online, download it for free. I tell people you're better off using the downloadable version rather than the online version, and definitely not the mobile version. Now don't get me wrong, I used all 3. This is one is by far has more perks, and once you get used to it, it's the easiest one to use because everything is right there that I want. If I can put a couple of charts there, I have my numbers there. All I have to do is press, click, everything's done for me. What time is the best time to invest? Now, Alexia, I do all my trading first thing in the morning, okay? Because now, I'm different than most of you people in the audience. I'm retired, which means you're going to work and I'm probably still sleeping. Okay? Sorry to be so blunt about it, but you'll be here at some point. At some point, hopefully, you'll be on the other side and you'll be 65 or 70 or whatever, and you'll be retired and you get to share whatever you're sharing. But the thing is, the best time to invest, for me, it's first thing in the morning because I don't do my trading 5, 10, 15 minutes, get it done, over with, and then go on with my day. Oh, Jeremy, you're one of those people. So, Jeremy, I'm going to ask you a question. Before I answer your question, you are going to answer my question. Okay? Now, favorite Delta selection on covered calls. Now, Jeremy, I want to show you something. And then you're going to answer my question for me. Because this is not just for you, this is for other people too. Okay, I go to my YouTube channel. Okay, YouTube, there's all the social media sites. See them? There's all social media. Oh, YouTube, there we go. All right, so we're going to go over to YouTube, and I'm going to introduce Mr. Jeremy. Okay. Videos, here we go. The oldest videos that I have.
Hi, I'm JC, and I'm a 10-minute trader. In less than 3 minutes, I'm going to teach you how to make more than the average bear. There are 5 keys.
All right, so that's JC, okay, my daughter, who sat on my lap and said, Daddy, what are you doing? Can you teach me? Now, Jeremy, most adults do not understand, most adults do not understand how to trade or make money consistently. So explain to me, in just a few minor words, how do you teach a 9-year-old about the Delta, the Vega, the Theta, and all the other kind of nice fun? Because you're asking me about the Greeks, which are very important to some people. So explain to me, if you can, how do you explain it to a 9-year-old what Delta means, what the Vega means, what the Theta means, what the Rho is? Ooh, that's a good one. What does the Rho mean? All that kind of nice, neat, fun stuff. And if you're doing that, you might as well throw in the Black-Scholes pricing methodology for standardized options. Might as well throw that in there too. How do you explain to a 9-year-old? Well, I'll tell you. Simple, safe, predictable, consistent. Okay, if it's on the list, great. Okay, if this happens, it happens, great. Do I get into the Delta and the Theta and all that stuff with a 9-year-old? No. It had to be simple. Anytime you hear me say anything, say, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader. So to get in and do my trades in less than 10 minutes, because that's the whole premise of the trading strategy. Less than 10 minutes a day, you can make 1%. Well, how can you do that when you're starting to look at things that really don't have anything to do with what we're doing? Yeah, and I'm saying the Greeks have nothing to do with what we're doing. So I'm waiting for your answer. What screen are you using? Just got here. Granny, how are you today? All right. Videos, oldest.
Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad didn't like me calling me that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading.
That's me, a bunch of years ago.
21 days in the month of March. What does that mean? That means every single day you buy a different stock. Every single day there's a different company paying out dividends. Seriously.
That makes me laugh every time I see it. Now, that was about 15 years ago, before we had the technology that we have now. So now it's a lot easier to trade. Now, just to let you know, for those of you who just started trading, okay, back in the 90s, it was $250 per trade to get in, and then another $250 to get out. So you're complaining about fees and commissions? Yeah. I remember when they went from 250 down to 125, I was like, yeah, great. And then from 125, they dropped down to 69. That was awesome. Well, nowadays, you guys can trade for free. So I don't want to hear any of the crap, okay? Us old guys who've been trading for a long time, well, we paid our dues and we paved the way to make it easier for you guys. So the trading strategy, simple, safe, predictable, consistent, 1% per week. And no, I did not go into the any of the Greeks. Not the Fibonacci, not the RSI, not the MACD, none of that stuff. Simple, safe, predictable, and it's so simple a 9-year-old can do it. So let me continue as we progress. Blockchain bully, what's happening? Yes, Alexia, I like to do my trading in the morning. Jeremy Lynn, favorite Delta. Okay, yeah, we're not going to do that anymore. Danobles, good evening. All right, can you go through your evaluation of a stock using the tool? No. Wasn't that quick and easy? You ready? This is how you evaluate the stocks. Are you ready? You go to Google, okay? In the Google search, okay? No. All right, hold on. Let's get out of there. Okay. Go to Google. In the Google search, you put in a couple of simple words. Dividend Kings List 2025. That'll give you a list of all the companies that have 5 decades of consistent profits. Then, when you got that list, you put in the list Dividend Aristocrats List 2025. Boom! It just pops up just like that. Imagine that. Ask Google and there it is. You do the same with the champions, the contenders, and Warren Buffett's list. Anybody else you like. If you like Kathy Wood's stock list 2025. If you like Jim Cramer's list 2025. So finding those lists, the ones I just told you, Kings, Aristocrats, Champions, Contenders, Warren Buffett, you take those lists and then you go over to take a ride to Chicago. Yay! Okay, Chicago, CBOE, Chicago Board of Options Exchange. What companies have weekly options? Great, and you just cross-reference them. That's it. That's how you find companies that are consistently profitable and have weekly options. That's it. Or you can just buy the list. But, it's there for free if you want to dig for it. Are you doing Western Union? Hey, bills, Philip. We'll take a look at that 1 second. All right. What screen are you using? Just got here. Okay, Granny, the screen that I'm using is Think or Swim through Charles Schwab. Mr. Nice Guy wants to take a look at Western Union. All right, let's take a look at Western Union. WU. Ooh, yuck. No, I don't do Western Union. Let me explain why. 20 June, 18 July, 15 August, 21 November, 19 December. Those are all months of the year. Months of the year, which means they are a monthly optionable stock. And I don't do monthly optionable stocks, okay? Because they're just not as profitable. The numbers just don't work for me. What do we have here? Arab Brown Sugar. Oh, Airy Brown Sugar, good evening. Sterling, Felix, what's going on? Hey, Mr. Munchie, what's going on? What's this? Michelle, good evening, Miss Michelle. How are you today? Okay, what else do we got? User 105417 likes Jim Cramer. Yep, you have good luck with that one. Check his rate of return over the last 5 or 10 years. All right, what do we have here? Do you invest in bank stocks that pay dividends? Of course I do. Is Western Union? No, wait, not Western Union. No, not Western Union. What was it? Wells Fargo. That's what I was thinking. Wells Fargo, Capital One Finance. What's the other one? Bank of America. There was another bank. I forget what it is. But there's a few of them. Okay, just look at consistency of profitability. If they're consistently profitable, it will be a dividend king, a dividend aristocrat, dividend champion, dividend contender. It will be one of those. Zhang Fu, you're here again. Okay, didn't you tell me you only buy gold and silver? So I'm kind of curious because you got a name that sticks out. Sorry, not very many people I know have a name starting with the letter X. So it sticks out. Now, a couple of days ago said, I only invest in gold and silver. Well, if you only invest in gold and silver, what the hell are you doing here? This has nothing to do with gold and silver. And I answered your question the other day about investing in gold and silver. I don't do it because it doesn't have a rate of return. It just sits there. It's a glorified paperweight, in my humble opinion. It's a retainer of value, not a cash producing asset. Okay? What else do we got? Okay, Delos. I already told you, Casey is only a year and a half old. No. Ricardo Velez. Let's take a look at Disney. Ooh, I like Disney. Disney is on the list. D-I-S. Disney. No. Wasn't that quick? Now, anytime you look at a stock, when you get good at it, when you know what you're looking for, it's relatively easy. Now, for me and for my daughter, it was 3 to 4 seconds. That's it. 3 to 4 seconds to analyze a chart. Yep. Let me tell you what I'm looking for. 5 things. You ready? The high, right there. The low, right there. Where was it? Right there. Where is it? Right here. And what's the flow? Down, up, down, up. There you go. 3 to 4 seconds. Now, if it passes that, well, then we go over to the numbers. Because remember, rule number 5, make sure the numbers work. Well, let me explain to you what the numbers are. Right? Now, I told you the main strategy I use is dividend. No. Dividend capturing 2.0, but there's another word to it. Covered calls. So you buy the stock, you sell the option. Okay, so the numbers, how do they work? What am I buying it for? 117.50. Okay, the closest strike price to 117.50 is going to be 118. All right, 117.50. The closest one, 118. What is it selling for? Well, 118 is selling for 167. Now ask yourself, let's see how good you are with that math. Remember, should have paid attention in algebra. What is 1% of 118? Because remember, I'm looking for a 1% return. So if I buy Disney, it's at 118, and I want a 1% return. Well, what is it? What's 1% of 118? You ready? It's 118. $118. Okay, $118. 1% of $118 is $1.18. It's actually that easy. You take the decimal point and you move it over 2 places. That's it. What's 1% of $55? 55 cents. What's 1% of $12? 12 cents. It's not that difficult. Okay? Adults have a tendency to make things so complicated. So when you're talking to a 9-year-old, okay, honey, do you see that right there? 118.61. Well, you take that little dot and move it over 2 places. What does it say? 1.18. Okay? It's exactly that easy. Move the decimal point over. 2 places. 1% of $118 is $1.18. Okay, so if that's true, well, it's selling for 167. So is 167 higher than 118? Of course it is. So this fits. It's more than 1%. It's actually that simple. 3 to 4 seconds. High, low, was, is. What's the direction? Great. What's the price? There it is. What's 1%? 118. What's the 118 going for? 167. I did that all in 15 seconds. That's it. It's actually that easy. But that's just step number 1. Okay? We like the chart. We like the numbers. Now I want to dissect the chart to get a better view. Because you can't get a good idea of what a weekly option trade is going to look like using a 1-year chart. Because that's too much information. So we want to break it down. I break it down from the 1 year down to the 90, which is the last 3 months. Now the reason I'm breaking down to the last 3 months because I want to know what you are doing. Now I say you, I mean the other investors. Well, take a look at this. 7.9 million shares of Disney traded today. 7.9. Okay, well, there's a lot of other people trading Disney. What are they doing? What are they thinking? Well, it tells you right here. Okay, it went down, it went up, it went down, it went up. Great, well, let's zoom in a little bit closer. What's the last 3 months look like? The last 3 months would be March 12th. March 12th. Right there. Okay, here's the last 3 months. Same thing. High, low, was, is, up, down, up, down, up. That's pretty easy, isn't it? So what am I looking for here? I'm looking for the flow. Look, how long does it take to go up and then down and then up and then down and then up again? What is the flow? Okay, that's the last 90 days, last 3 months. Well, I can tell you right from here, it's already going to be a no. And the reason it's already going to be a no, because 90 days ago, 3 months ago, it was here. Now it's at a high. There's no sense even looking any further. Okay, now we couldn't see this on the 1 year chart, but we can see it now. So bye-bye. So think about it. To isolate, to look at the 1 year chart, it took 3 to 4 seconds. To take a look at the numbers, it took another 10, 15 seconds. Okay, what's the price? What's this? What's that? With 10, 15 seconds. Okay, what's the price? What's this? MET, MetLife. MetLife, yeah, I was right. Okay. Same thing. High, low, was, is, up, down, up. 78.99 to 79. There is no 79. The 80 is going for 50 cents. No. Wasn't that quick? Less than 15 seconds. High, low, was, is, what's the price? What's this? What's this? No, thank you. It doesn't take that long at all. What's next? PRU. PRU is a monthly. That's Prudential. See? Monthly. Nope. Wasn't that quick? That was even quicker. Okay. Amazon. I don't do stocks over $250. Sorry. Google. G-O-O-G. No. Why am I saying no to Google? Well, Google only has 1.5 years of dividends. That's it. No. People ask me all the time, at least once or twice a week, every single week without fail. Hold up. Every single week without fail. People ask me, why only dividend stocks? Why not other stocks? Well, here's the reason. Dividend stocks have a tendency to be predictable and repetitive. Well, that means they do the same things year after year after year. So knowing that, well, that gives me an advantage. You know what else gives me a better advantage? Check this out. You're going to love it. We're going to go here to Market Watch. And then we're going to go to, oh, not that one, this one. Come on. Right there. All right. Now, this is what's called a dividend, an EX dividend calendar. It's free to use. It's on Thinkorswim. It's not mine. You know, I don't own any of this. This is all for Thinkorswim. Anyway, each one of these dots you see, these little green dots. Now, let me interrupt for 1 second. Now, for those of you new here and saying, well, I can't see the dots. What does it say? There's a reason. This here, this screen is live on YouTube, and this session is being recorded. So if you think it's interesting, you want to find out more information, you can go right to YouTube. Pull it up on your big screen TV at home and watch it, and then you'll be able to see all these numbers. Well, let me give you a few. Ben Franklin, Medtronics, General Dynamics, Cardinal Health, Nucor, Illinois Toolworks, Cincinnati Financial, BDX Corporation, I don't know that one, Stanley Black & Decker, Nextera, McDonald's, Pepsi, GPC, oh my goodness, GPC, 7, I'm going to get my 7, okay, ready? 7 decades of increased profitability. You imagine that? It's been giving profits. It has profits longer than I've been alive. So why isn't it on your list? It's a good question. Do you ever sell a put with a strike price higher than the stock price for higher premiums? Timothy, awesome question. Great. Listen very closely, Timothy. For me, it's always, I'm going to do it 3 times. Ready? It's always about the numbers. Every picture tells a story. Rod Stewart, 1970, in case you're curious. Every picture tells a story, don't it? Anyway, I can't hit those high notes. But anyway, it's going to always be about the numbers. What am I paying for it? What option can I sell against it? Oh, shit, there's an Amber Alert. Miami-Dade County. All right, so why am I getting it? I'm in St. Pete. All right, whatever. Where was I? I forget where I was. And another Amber Alert. Miami-Dade County. See, the funny thing, no, don't get me wrong, I'm appalled that people do anything to our children. But I'm 4 hours away. What can I possibly do if I'm 4 hours away from Miami? Anyway, let's keep on keeping on. Oh, so anyway, here, as I was saying, this session is being recorded. Okay, so if you want to go back and watch it or listen to something you may have missed, okay, on YouTube, it's recorded. All right, so anyway, let's keep on keeping on. The green dots represents a company getting ready to pay a dividend. There's 4 dates. 4 dates, calendar dates, Monday, Tuesday, Wednesday, the 1st, 5th, 7th, dates. 4 dates you got to remember. Date number 1, okay, the announcement date. That's when the company comes out and says, hey, everybody, this is James from Dividend Stock Talk. We had a great year this year. We made so much money. This is how much you're going to get, and this is when you're going to get it. They tell you what they made. They tell you when you're going to get it. Simple as that. The announcement date, that's the first date. The second date, represented by these little green dots, it is called the EX dividend date. That is the last day the stock trades before the dividend is paid. Now, why is this thing still staying here? Thank you for the notification. I don't really need to know. I don't live anywhere near there. Sorry about that. Cancel. There. Back again. All right. So anyway, date number 2, the EX dividend date, means last day the stock trades before the dividend is paid, which means, listen closely, it means if you want to get the dividend for Cincinnati Financial on the 23rd of June this month, which is what, 2 weeks away? If you want to get that dividend, you have to buy that stock before that date. That means you're going to buy it on the 16th, the 10th, the 2nd, the 4th, the 12th, the 18th. Any day before that date in order to collect the dividend. Okay, it's called the EX dividend date. Date number 3, the date of record. Now, whoever owns the stock on the date of record is the person who is going to get the dividend. Okay? If you own the stock on the date of record, you are entitled to the dividend. Date number 4, payment date. That's when you get your money. Simple, right? All right. That being said, that's why I like dividend stocks and only dividend stocks. Because, oh, wait a minute, I forgot that part. I forgot that part. Hold on. Cincinnati Financial. Okay, that's EX date on the 23rd. Most of the time, predominantly, often, almost always, the stock will go up in value before this date. Before the dividends pay out, stocks have a tendency to increase in value. So by knowing when the stock is going to go up, hence the calendar, hence all the dates, hence all the little green dots, I know when these stocks are going to go up. But what good is that kind of information unless you have a trading strategy that complements it? Okay, do I just buy the stocks and wait for them to go up? Nope. Because you have to wait for the stock to go up to get your profit. So what do? I do what's called a covered call. Now let me show you a few samples and then you will see, like, why not? Why didn't I think about that? Because if I buy the stock, let's say hypothetically, Cincinnati Financial, if I buy that one, I'm going to buy it 2 weeks before on the 9th. Okay? And then I'm going to sell it to someone for the exact same price I paid for it through a covered call. Now let me explain briefly. Covered call, I buy the stock, I sell it to someone else. They have between the day I sell it and the agreement when that option expires. So if I buy it on the 9th, okay, and I sell it to Tom, okay, Tom, you want to buy my stock from me? Yeah, great. Well, give me a little deposit. Give me a little taste. Give me a little cash. I'll hold it for you until Friday. If you want it on Friday, come pay for it. then it's yours. If you don't show up on Friday, I get to keep that little deposit, non-refundable deposit, also known as a stock option premium, okay? I get to keep that money. So if he comes back on Friday, he takes the stock, I get my money back, plus the little, the non-refundable deposit he gave me. If he doesn't come back and pick it up on the 13th, meaning the stock's not valuable enough, okay, it may have gone down in value, then I will continue to own it, and I will write another covered call on the 16th and do the exact same thing. Tell him, oh, John, you want to buy it? Great. Give me a little bit of money. I'll hold it for you until the 20th. If you come back on the 20th, you pay me the money. I give you the stock. Okay? If he doesn't come back, I keep that money. And then I do it again the following Monday. But the following Monday, I get to get the dividend. So check this out. If I get 1% this week, I do it again, get 1% that week, and then I do it again, get 1% this week, plus the dividend. And then I will do it every single week until it hits my stock price. Well, if I'm buying, what is Cincinnati Financial going for? Let's find out. Oh, wait a minute. Cincinnati Financial is a monthly. I know that one, CINF. So I wouldn't be doing it. But if I was doing it, check this out. The 48.25, okay, the 148s. So the 150s are going for 10 cents. That's one of the reasons I don't do monthlies. The premiums suck. They do. But I would collect that. Let's do a better one. Ford. We all know who Ford is. There we go. 1053. All right. So 1053 on Ford. Well, the 1050s are going for 17. Now, 1050s on 17 cents on a $10.50 stock. Well, 1% of $10.50 is 10 cents. But if I'm collecting 17, that's almost 2%. It's 1.7%, but it's almost 2%. All right? So if I get 2% every single week, well, that's a 100% rate of return by the end of the year. That's why I like weekly options with good quality companies. Now, Ford's been in business for over 100 years. Why isn't it on your list? All right, what else do we have here? Hey, La Playa, what's happening? La Playa, it ain't so beautiful here. Well, actually, it is beautiful. It was, I love it after a rainy day. The rain comes down, clears up the whole sky, and the air smells so fresh after a good rainstorm. Love the smell of a rainstorm. Okay, anyway. Tristan, how are you today? On tracks. Okay, Tristan, I've been trading for a very long time. You got to tell me what the ticker symbol for On Tracks is. La Playa, I have my coffee before I go to work. Well, jolly good. Tim, do you ever sell a put with a strike price? Yeah, always going to be about the numbers. Always, Tim. Okay, what's the stock? Okay, take a look. Up, down, up. Well, now it's coming down. I wouldn't jump into Ford at this moment in time. Go back one day. I wouldn't jump into Ford there either. Look, it's going up. The high's right there. That doesn't make sense. That's where I would jump into Ford. Here's the 30-day bottom, the 30-day top. She comes down. Here's the bottom. 1, 2, 3 days to the upside. Yep. Next day I'll jump in. That's what I want to see. I want to see a new bottom. See the bottom here. There's a bottom here. A couple of days to the upside, then I jump in. A couple of days to the upside, then I jump in. Okay? Never buy something you don't like or you don't understand. I know who Ford is. I know what they do. So I hope that explained it a little bit for you. Smitty, how do you get those stocks on your calendar? Do you have positions in those? Absolutely not. Let me show you, Smitty. You ready? Now, Smitty, I don't know if you use Thinkorswim, but I use Thinkorswim. Almost everybody in my trading group uses Thinkorswim. So let's go take a gander at the watch list. Now, the watch list over here, okay? The very second column over where it says quotes, I want to click on that. Down here towards the bottom, it says create watch list. Okay? Create watch list right there. So I click on that, and I can name it anything I want. Watch this. You ready? Oh, wait a minute. I got to click on it first. There we go. La, 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 la. Space. La, 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 la. There we go. All right. So now I want to add symbols. Now you have two ways of adding symbols. You can do it one at a time. Okay, ready? M for Macy's, F for Ford, T for AT&T, MSFT for Microsoft, DELL for Dell, O for O Realty, ED for Consolidated Edison. Well, we'll just do those. Now, once I insert, I can insert them two different ways. Okay, one at a time, or importing. Okay, if you import, it's just click, cut, paste, and import. That's it, simple. Okay, then I hit the save button. All right, let's get out of there. Let's get out of there. Let's go back to the Market Watch. Let's go to the little sunshine. See the little sunshine right there? I want to click on that little sunshine, and I want to go to personal, because that's my personal list. Okay, personal, right there. And this is all my personal lists. And look at this little gibberish right there. That's the list I just made. So we go click on that. Oh, look at that. Oh, Realty and Macy's have dividends in this month. Well, that little crap I did. Well, I don't really need that list, so we kind of do it the opposite to get rid of it. Go back up to watch list, right next to it right there. All the way down to the bottom, down here, it says delete. Well, I'm going to get rid of that gibberish one because it means nothing to me. That's the one we just threw together. Whoops, right there. Okay, delete, and yes. Gone. There you go. Now it's gone. Simple, right? All right. Hopefully that answered your question. Now, we're just doing weird questions. Why aren't you guys wanting to take a look at stocks? Uh-oh. Uh-oh. Yeah, so Google's a no. Amazon doesn't have a dividend, and Amazon's a little too pricey for me. Ricardo, Home Depot. Wow, you're just throwing them out there, aren't you? Home Depot. HD, Home Depot. Ooh, see that? High, low, was, is, look at this. Up, down, down. Okay, 363. I normally don't do stocks over 250, but 361, the 362 is going for 485. Well, that works. Well, let's take a look. Now, 2 or 3 seconds on the chart, 2 or 3 seconds, well, 4 or 5 seconds here. So 4 or 5 seconds, 4 or 5 seconds. Now, let's take a deeper look, because I like the number here, I like the number here, I like the number here. So let's see if it's a good deal or not. All right, so a year ago, we're at 345. The high of the year was at the end of November, and that was 439. Well, the bottom of the year is right there. Okay, the 9th of April. Okay, 326. So from the 326, high, low, was, is, look at the motion, up, down. Well, this right here tells me no. I couldn't see it on the 1-year chart, but I can see it better here on the 60-day chart. That's 2 months. Okay, up, now it's coming down. Yeah, no thank you. Now, don't get me wrong, I love Home Depot. It's not no, like no, never. It's like not this week, because it doesn't make sense. As soon as it finds a new bottom, then she turns around, then I'll think of jumping in. Okay, so no to Home Depot. Walmart, WMT. Oh, no. Isn't that quick? Okay. High, low, was, is. Look at the motion. Up, down, up, down. It's in a downturn right here, which is easy to see on the 1-year chart. Okay, so I have no need to look at the numbers, and I have no need to look a little deeper. See, once you get your list of companies you like, aristocrats, champions, contenders, the kings, whichever one you like, it doesn't take long. That's quick look. No, not this week. Well, next week's another opportunity. Take a close look. Okay? Take a close look Here's the 30-day bottom. Here's a 30-day top. Do you notice something interesting? Look, she went up, down, up. Now she's coming down. A little bit of a gap here. How much further down is it going to go before it finds a new bottom and turns around? See? New bottom, turn around, go up. Well, it could pop up tomorrow. Because see, now it's almost lower than the 30-day low. It's not that difficult. High, low, was, is, what's the direction? Up, down, up, down. As soon as it finds a bottom. So Walmart, it looks like it's going to be a good contender for next week. So I'm writing it down for next week. WMT, woohoo! Alrighty, so what else we got? TGT, Target. Now, if you did not know, Walmart is a dividend aristocrat. More than 25 years of increased profitability. Target is a dividend king. 50 years of increased profits. Whether you like it or not, whether you agree with their politics, whatever. But it's a yes just by looking at it. See? High, low, was, is. Look at the direction. Up, down, sideways. All right, it might not be because I can't see that hook very closely. But it's at 99.29. Well, what's the closest to 99.29? Okay? Closest to 99.29 is going to be 99. Well, the 99 is going for 194. Well, 194 is 2%. Well, close to 2%. And it's a dividend king. Okay, so let's take a closer look. A year ago, 147. Topped out the year at 168. That was the end of August. The bottom, right there on the 8th of April. Imagine that. The last 90 days, right there. Okay, here's the last 90 days. Same thing. Okay, high, low, was, is. Look at the motion. Down, up, down, up. Well, what's happening here? Okay, Tuesday was the high, Wednesday was lower, and today was lower. So that's 2 days to the downside. No, thank you. No, thank you to Target. Dallas, Ricardo, chill out. I want to see what he thinks of these different stocks. Okay, well, there you go. I just gave you my opinion on all of them. How much are those books? Well, all the books, believe it or not, I don't have my books on my own website. I got to change that. They're all available on Amazon, which is kind of funny. I don't invest in Amazon. I got my books on Amazon, but I don't invest in Amazon. Cheesy case. Cheesy case. Cap. What the heck is cap? Never a good sign when I have to say, what the heck is that? CAP. Okay. Cap has no dividend, no options. Yeah, no thank you. Dulles, excellent info. Thanks for sharing. You're welcome. One up. I love uncertainty. Bye, bye, bye. We just got a gift. Cool beans. Okay. Glue bust. Ain't gonna happen. You're not. Wait, we're not. You're wrong about Casey. Look it up. We're not. You're wrong about Casey. Oh, I'm wrong about Casey. Wait a second. Casey. C-A-S-Y. Oh, okay. Interesting. Take a look. C-A-S-Y. What's that other one I was thinking of? There's another one I'm thinking of. It's pretty close. Coney. Oh, that's what I was thinking. I was thinking of Coney. Sorry. I apologize. I was thinking of Coney. C-O-N-Y. This is Casey. C-A-S-Y. No. No to Coney. No to Casey. Reason being, 20 June, 18 July, 15 August, 21 November, 19 December. I don't do monthly options. They just don't work for me. Okay, you might like Casey. I don't apologize if I insulted you in any mean way, shape, or form. But I'm not going to do it because it just doesn't work for me. Okay, weekly options only. Can we trade with you, or how can I join? Yeah, you do. You can if you want. All right. I have a morning trading service. Monday, Tuesday, Wednesday, Thursday. Now, I don't do this all the time. I only do it when someone asks me. So someone over on channel number 4, I don't know what channel it is, my other TikTok channel, asking me, can you join me? Yeah. Monday, Tuesday, Wednesday, Thursday, 9 a.m. Eastern Time. Friday, 2:30. The reason we're on 2:30 on Friday, we want to have enough time before the market closes. So I buy everything on Monday and Tuesday. Wednesday and Thursday, we just look. Friday, we decide, well, what do we do? Well, we're not going to know that until 2:30 tomorrow. Anyway, let's keep on keeping on. Roger, good evening. All right, let's keep on going. Dallas, look up Casey. It's not 1 year old. Check out. Yeah. I said I apologize, okay? Casey's not 1 year old, but Coney is. I thought it was Coney. All right. Happy Thursday. Yep. COP, Francisco. I love COP. Conoco Phillips. Ooh, probably not. But let's take a look. Okay? High, low, was, is. Look at the direction. Down, up, down, up. Well, right there does not look good. So zoom in a little closer. Okay? 30-day high, 30-day low. Look, off the chart. Sorry, you lost the product. That's like last week. See, here's the bottom last week. No, that's 2 weeks ago. 2 weeks ago. Shot up, pulled back, right there. Yeah, okay. So either last week or this week, because here's your bottom. Okay, 1 day up, 2 days up, third day, yep, that's where I would have jumped in right there. Okay, I'm not cherry picking. I'm telling you, 30-day bottom. Okay, you can look at all my old videos. 30-day bottom, 2 days to the upside. If the third day is an up day, which this one was, it opened up higher, actually gapped up higher, that's where I would have jumped in. I love a 30-day bottom. Because on a 30-day bottom, stocks have a tendency to go up. I love predictability. I love consistency. And I love profitability. If they all go together, great, that works for me. We got 10,066 different companies to look at. It shouldn't be that difficult, right? As someone who just starting and doesn't know anything, where do I start? Six-stepper. Where do you start? I'll tell you where you start. You start with your mindset. What do I mean by that? Well, all throughout your life growing up, because this is what happened to me, happens to everybody, okay? You're always being drilled in your head, buy low, sell high. Annual percentage rate, compound interest. Well, great. How's that working out for you? Well, it didn't work out for me, so I tried and I looked until I found something, and it just so happened to be, it wasn't me looking for it. It was me trying to figure out a way to teach a 9-year-old how to do it. Simple. Well, buying a covered call strategy is the second simplest strategy. The easiest is just to buy the stock. But there's no profitability in just buying the stock because you have to sell something in order to make a profit. So the covered call is easy. If I buy it for $100 and I sell it for $100, okay, in a covered call, I get the transaction fee or the premium from the call option. Well, that's the easiest one all. You can actually have your broker say, hey, I'd like to do a covered call. Can you walk me through it? Find a good company you like. That's the toughest choice, finding a good company you like. So I got a couple of rules. Rule 1, never pick out something you don't understand. If you don't understand, don't buy it. Never sell it at a loss. It just doesn't work out. Okay, so 301 Playa. Pfizer, yes. Eli Lilly. I'm pretty sure Eli Lilly is over my price. I try not to go over $250. Because if I can get a nice return on a $20, $30 stock, well, why not? As opposed to I think Eli Lilly is LLY. Is that right? Imagine that. I was right. Okay. 812. I don't do stocks over $200-300 because for some strange reason it just feels like if she drops 50%, it would. The funny thing is, it's a mental thing. Because a $20 stock can drop down to 10. That's a 50% drop. But it's only $10. Doesn't feel that bad. But an $800 to a $900 stock, when that drops 50%, that's $450. Well, for some strange reason, it just feels worse. It's still a 50% drop. It just feels worse. It's a psychological thing. So I'm honest with you, okay? It's a psychological thing. If it's over $200, $300, it just feels weird. Even though it's a 50% drop, it just feels uncomfortable. All right, anyway. Thanks, Maersk. Yeah, La Playa. Yeah, too expensive. You got that one. DIN. You just answered my question. Into the blue, dude. Why do you say no to Target? Mindy, didn't we just go over that one? I missed some questions. Okay, yeah, holy cow, I missed some questions. Holy cow. I try not to miss any questions. Have a copy. Do you have a sell put? You already did that one. Why are those stocks on your calendar? Do you have positions? No, I put the stocks there. Candace, how are you doing, Candace? Smitty, how do you get those stocks on your calendar? I just showed you how to do that. Lord Detroit, have you done Apple? Not yet. I bought it earlier this week and thinking I might have made a mistake. Now, Lord Detroit, we did pick, as a collective, we looked on Sunday night, and yeah, Apple looked great. So let's take a look at Apple. We actually picked out Apple from last week, too. So let's take a look at Apple. Lumina, we'll take a look at Riley in a minute. Okay, so sit tight. Which one are we about to do? Apple. Okay. Apple, always the same thing. You ready? High, low, was, is, up, down, Okay, $200. See, $199.20. The closest one's going to be the $200. The $200 this week, $272. So it looks good. However, look at the chart. Now, Apple came up for a pick this week, and it came up for a pick last week. So let's go over the numbers last week first before we go over the numbers this week. So you can see how it worked out. Okay, so last week, let's check that out. All right, here's this week here. Here's last week there. Okay, so let's go this right here. There we go. All right, so this is what we saw last Sunday, okay? The high, the low, where was it? Where is it? Look at this. Down, up, down, up. Here, we're going to the upside. So one up, and this is the third one. So it's still in an upward trend. Now, we jumped in on Monday. So first thing Monday, last Monday. All right. There it is right there. That's Monday right there. Okay? So I jumped in at, what did I jump in at? At 200. Okay? So the 200 last week was about 2%. Okay, great. So what happened last week? Okay, so remember, last week we jumped in at 200. All right, so that's Monday. That's Tuesday higher. Wednesday lower. Thursday lower. Friday 204. Okay? So last week it was profitable because we jumped in on Monday at 200. Okay? We sold the 200 call, got 1%, and then Friday we're out. Okay, great. Well, it came up again because look at it. It's going up nicely. So again, we jumped in again this Monday. So let's look at this Monday. See where it is now? At 202, 204. Watch what happened on Monday. Okay? So Monday, she opened up here higher. Finished lower, but I don't look throughout the day. I just go from the opening of the day. So the opening of the day is at 204. So then I sold the 205s for this week. So I jumped in at a little over 204, sold the 205s. Well, let's look what happened this week. Tuesday, lower. Yuck. Wednesday, lower. Thursday, lower. Okay, so this is where we are now. Remember, I'm in it at 204, and I sold the 205s. So this week, the stock is down. But I did make my 1% this week. So I made 1% last week, 1% this week, but I'm in it at 204 and change. Okay, see, 204 and change. And I sold the 205s. So I'm in it at 204 and it's at 199. Am I at a loss? No. I still own the stock. I collected a premium last week, which is over $200 per contract. Each contract, remember? If the stock's at 200, 1% of 200 is 2. No, wait a minute. 1% of 200 is 2. Okay, but one contract, okay, is $200. So $200 last week, $200 this week. Well, now next week, okay, I still have the stock at 204. So next week, we're at 199 now, and next week's 204s are. We'll take a look a little bit more. Okay. All right. So next week's 204s right here. Well, they're only worth the 205s next week are only worth $1. That's 0.5%. Okay, so I got 1% last week, 1% this week. Next week they're offering me 0.5%. Now that's 2.5% for 3 weeks. However, I'm at 204. So I'm not going to sell the 205s. I'm going to sell the 202s. And the 202s are going for 168. Not much better, but still. It's $168 rather than $200. Okay, I'm okay with that. But here's the thing. Are you okay with that? Because stocks go up, stocks go down. Stocks go up, stocks go down. Okay, I don't mind Apple. Because let's take a look at the seasonality for Apple. Now, some of you may or may not know what seasonality means. Let me briefly explain. Okay, it's just basically a chart. All the way over to the left is January 1st. All the way over to the right is December 31st. So it's a whole year. Okay, well, we have a red line and a blue line. Well, the blue line is the movement this year. This is what Apple is doing this year. Okay, the red line is 10 years of information. That's 2015. Wait a minute. Yeah, 2015, 2016, 2017, 2018, all on top of one another to give us an idea of what the stock normally does. Well, look what it does normally in June. It normally goes up, and it keeps going up all the way until the beginning of September, before there's a little bit of a pullback, and then she goes back up again. Well, Apple, you buy it in January, sell it in December, you're going to make money. Because 10 years in a row, this is what it looked like. Because that's the average movement. Now, is that guaranteed? No. It just gives us a good idea. If it did it 10 times, 10 years in a row, well, maybe it might do it again. Maybe. Just maybe it might do the exact same thing again. Well, we're here. And it normally goes up. Well, great. Well, I that's one of the reasons why I bought it. Because Apple has a nice move right there. And I wanted to jump in on it. So I don't mind owning Apple, even though I'm in at 204 and now it's at 200. I have no intention of selling it for less than I paid for it. Remember, never buy something you're not willing to hold on to for the rest of your life. If you don't like Apple and you don't want to hold on to it to the day you die, on your deathbed say, "Oh, honey, here's my Apple stock. It's yours now." Yeah, if you're not willing to do that, don't buy it. Sorry, I'd be so blunt. Okay, but we're the only species on the planet that's got to pay to live here. So after you retire, you got 2 choices and only 2, and don't let anyone kid you. Okay, 2 choices, that's it. Learn to do it yourself, take control of your own money, invest it yourself, or 2, give it to someone else, let them do it. But pretty much, nobody has more interest in your money than you. Maybe your ex's lawyer. Maybe. All right, so I like Apple. That was one that we picked up last week, one we picked up this week. Oh, Jeremy, do I avoid covered calls over earnings? Well, sometimes I do, sometimes I don't. It all depends on who the company is. Because sometimes, now you got to remember, on earnings, the market maker has the choice to decide what to open the stock for the very next day. So if they have positive earnings, you would think that the stock would go up. Negative earnings, you would think the stock would go down. Not so. We've actually watched a bunch of companies have great positive earnings and the stocks go down. And sometimes you get crappy earnings and the stocks go up. So there's no real rhyme or reason or consistency with earnings reports. If you take two earnings reports, one's negative, one's positive, but the stock goes up regardless, well, what's the point? So La Playa, we already looked at Eli Lilly and it was a no. Pfizer, let's take a gander. Or let's change that back. There. And back to here. Okay. So, to answer the question about getting into Apple again, like, next week, it's going to be a no at the moment. Now, I'm already into it here at 204. No. Last week we got in, we got out. This week we're in at 204. We're looking at the 205s. Stock drop. So last week we made money. This week we still own the stock. Most likely we're going to take it into next week. Most likely. But it's working. Concerned citizens, how are you again? Back again. Wonderful, wonderful. Do I usually do in the money call covered calls? Okay, so concerned citizen, I'm going to tell you the same thing I tell everyone else. Okay, anytime I buy anything, it's always, 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 always going to be about the numbers. What am I buying it for? What covered call am I selling? What kind of rate of return am I getting? And what is the stock doing? Those are the numbers. Does it make sense? Is it the right numbers? Which direction is it going? So wait a second, we had another question. La Playa wanted to take a look at Pfizer. PFE. Oh, no. See, what do you think? Look, 30-day bottom, baby's still going up. Now, had you got in last week or Monday or a couple of weeks ago when the bottom was, because here's the bottom here. 2 days to the upside, 1, 2. Then I've been out here on Monday and then followed up. Who knows what happened then? Okay, but look at this Monday. Not a clear, let's back it up a little bit. Okay, now this right here, is that an indicator to jump in on Monday? Well, here's your bottom here. Now she's going up. Here's your high. Here's your low. She came down. Now she's going up. So yeah, that is an indicator to jump in. Would you have jumped in on Monday? I don't know. Would you? Okay, so I wouldn't buy any at this moment in time. All right, Maersk. Okay, La Playa, you got to give me the ticker symbol for Maersk. Collateral for one contract way higher. I'm not quite sure what you mean, collateral for one contract way higher. So Jeremy, Procter & Gamble, probably yes. Coca-Cola, probably no. So let's take a look. Procter & Gamble. PG, Procter & Gamble. Ooh, I like that. See that? Right there. Okay, high, low is, look at this. Up, down, up, down, up, down. What's going on here? Let's zoom in a little closer. Should we spend more time on this? Should we? No, we shouldn't. Okay, 30-day high, it's still going down. But look, it looks like it's slowing down. So this would be a great pick for Monday or Tuesday because I'm looking for the 30-day bottom. Well, it's today so far, but look, it's slowing down. So we're going to slow down. Maybe it might slow down and then go back up again. Then it might be a yes. But at this moment in time, Jeremy, terribly sorry, I'm going to sit back and hold off. Coca-Cola, probably a no. I think I bought Coca-Cola once. And the reason why I normally don't do Coca-Cola, 71.70, the 72 is going for 55. I usually never do Coca-Cola because the premiums are always less than desirable. La Playa, RBC. No. That was quick, wasn't it? Okay, here's your last 30 days. Bottom, top, 1, 2, 3, 4. 4 down days in a row. What do you think? Keep your eye on it. In another week or so, it'll be down here. Then it'll be turning around again. If you like the company, write it down. Follow it. Watch it every single day. Because they go up, they go down. They go up, they go down. So this is coming down. It's going to find the bottom because they go up until they're done. And guess what? They go down until they're done. Then they turn around, they do the whole thing over again. Up, down, up, down. It'll tell you exactly what it's going to do, but you just got to be patient. I don't know what's wrong with the younger generation. They're just in such a hurry to get old. I know, because 50 years ago, I was in a hurry to get old. Well, I'm here now, and I don't like it. I like being in my 20s and 30s. I had so much fun. Anyway, let's keep on going. Ooh, somebody want to take a look at Riley. Now, I do own a whole shitload of Riley. Let's take a look. Now, this one will make you cry if you think about it. Take a look. $24 is the high. Look where the low is, $2.80. So it goes from $24 to $2.80. That is a 90% drop in price. So why do I own it? Well, because I didn't buy it up here. I bought it down here. But wait till we take a look at the 30-day chart and the 90-day chart. Total different story. This looks like shit. But what do the numbers look like? 375. The last trade was 3. Okay? The last trade was 3. Well, the 3s are going for 18 cents. Now, I know 18 cents doesn't sound like a lot of money, but the stock is $3. Okay? The last trade, 302 for 1 week. But interesting thing about Riley, you can't buy Riley on margin. It has to be all cash. It works. Okay, so let's zoom in. Let's take a look at the last 90 days. Okay, the last 3 months, the last 90 days. Doesn't that look totally different? Totally different. But we're looking at the exact same thing. You ready? High, low. Where was it? Where is it? Look at the momentum. Up, down, up, down, up, down, up, down. If you take a look at the motion, simple. Up, down, up, down, up, down, up, down, up, down. See, it's coming down at the moment. Not a time to jump in, but keep an eye on it because eventually it's going to hit the bottom, turn around, go back up again. Because that's what it's been doing for the past 5 or 6 months. And it's paying crazy premiums. Okay, I'm getting 4, 5, 6% every single week from Riley. That works for me. Next, what do we got? If you're in profit in the stock, do you sell on Friday too? No, Thomas, I usually let the options, either let the options expire or let them get called away. That's my preference. Let it expire worthless or let it get called away. All right, what do we have over here? As someone who's just starting and doesn't know anything, where should I start? Oh, we already talked about that one. It's mindset first. It's a whole new set of vocabulary, it's kind of like a whole new world. Because instead of investing for annual returns, someone will say, oh, look at, the company's paying a 10% dividend for the year. That means you have to tie it up for the whole year to get that. Yeah, I'm going to say no thank you. You know what I mean? I like weekly trading. All right, anyway. Twilla, sales Q. I don't know what sales Q means. Ricardo, MBT. MBT. Sorry, dude. MBT's not popping up. Oh, NTB. MTB. MTB. All right, there we go. No. How was that? No. Let's go back to here. Okay. Now, the reason I'm saying no to NTB, 20 June, 18 July, 19 September, 17 October, no, no, and no. I don't do monthlies. The numbers just don't work. I joined a bit late. Got that. Going to trade. Blah, 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 blah. Okay, got all those. Okay, next. Delos. Money is hard to get and easy to spend. I'm going to disagree with you. There's so much money out there, it just keeps flooding in. You just got to know where to look and what to look for. What do we have here? Into the blue, yeah. And I'm stuck with the volatility of Tesla. I don't trade Tesla, so I don't feel bad for you. Sorry. Now, I do have stocks that I'm stuck in, but they still give me weekly cash flow, so I'm okay with that. La Playa, RY. What is RY? Is that Ryder? RY. Well, let's try it one more time. RY. RBC. RY is RBC? Yeah. No. Okay, 20 June, 18 July, 17 October, no, and no. I don't do monthlies, the numbers just don't work out. Terribly sorry. Uh-oh. Cipher 1. Can you repeat the 3 stages of the beginning of the workforce? Cipher 1. I'm surprised you even remember that. Okay, so he wants me to remind you, okay? Now, everyone is different, but at some point in time, you are going to retire, which means you're going to stop working. Well, you got a choice. Trust me, at some point, you are going to stop working. Whether you flop out dead on the assembly line, you're still going to stop working. But here's the thing. You can choose to stop anytime you want by replacing your income. Well, how do you replace your income? Well, we're all adults here. We know how much our monthly bills are. We know what the rent is, the mortgages, the insurance, the car payments, the groceries, the electric bill, the heating bill. Oh, damn, it's June. June is the highest electric bill all year. We know. So you know how much money you need. I'm going to say it slowly. N-E-E-D. Need. There's a huge difference between needing and wanting. Okay? Food, shelter, clothing. That's the only thing you need. You don't need a car. You don't need to, a brand new suit or a new dress or a new pair of shoes. You don't need that. You want it. It's a big difference. Okay? You don't need electricity. You want it. Okay? Food, shelter, clothing. It's the only things you need. So figure out how much you need on a monthly basis and work the equation backwards. So if you need $5,000 a month, well, what do you need to have at 1% or whatever trading strategy you use to give you that money to replace your income? Okay? So at $5,000 a month, well, you divide it, you do some fancy math. Here we go. Let's do some fancy math. Glasses. Here we go. Okay, so clear that out of the way. So $5,000 a month, just for the fun of it. Multiply that by 12, because there's 12 months in the year. So you need $60,000 a year just to live comfortably. So $60,000 a year just to live comfortably. What do you need in order to get that? Well, you divide that by 52, because it's 52 weeks in a year. You need to make $1,153 every single week. So $1,153, well, that's 1% of what? $115,000. So $115,000, 1% a week is around it's about $1,150. That's enough to give you $5,000 a month. Satisfy you. So here's the thing. How difficult is it to come up with $115,000 in order for you to quit working? So when it comes time to quit working, you got 3 opportunities here. Okay, you ready? Opportunity number 1. You can walk out. You get enough money coming in consistently on a weekly basis. You can go up to your boss and say, yo, you can take this job and shove it. I ain't working here no more. You can do that. You can walk out if you got enough money coming in on a consistent basis. Now, you can age out. No matter how much money you got, you can age out. You come into work one day and your boss says, hold it, you get too damn old. Go home, retire, enjoy the rest of your life. Age out. So you can walk out, you can age out, or you can toe tag out. We all know what a toe tag is, right? Yeah, I know a lot of people. My friend, who's at my wedding, okay, he toe tagged out. His brother, younger than him, walking out to the car and just fell over dead. Walking out to the car to go to work, he just fell over. And he was younger than me. Toe tag out. You had 3 chances. Toe tag out, walk out, or age out. Now, I walked out. I had enough money set aside at 1% every single week to pay all my bills. So I have a nice, comfortable lifestyle, and I'm perfectly okay with that. I don't need a Lamborghini. I don't need a beach house. I mean, I like to take a vacation every once in a while. No, you'll see some of my videos. You'll see me in the mountains. You'll see me up in Maine. You'll see me down in the islands. You'll see me, all over the place. But it's not a luxurious lifestyle. I'm a very simple man. Okay? I don't need... So you figure out what you need on a monthly basis to live a comfortable lifestyle and work it from there. If you need 110 grand, great. That's 5,000 a week. 250 grand, well, that's $10,000 a month. 250,000 is $10,000 a month, roughly. Anyway, let's keep on going. Somebody wanted to hear that. Yeah, toe tag out. Zypher, Sage, yep, Zypher wanted to hear that one. BP, British Petroleum, the player wants to take a look at British Petroleum. Then you get your wand out. British Petroleum. It's like, Inspector. Anyway, no. Sorry, wasn't that quick? No, look at it. Here's your bottom here. Shot up. Now it's at a high. No, it doesn't look like it's at a high because it's the 1-year chart. Because the high for the year is right 38. The low for the year is at 25. Okay, she went up, she pulled back. She went up, she pulled back. Now she's going up again. But let's zoom in, because right now, at the 1-year chart, it looks like a great time to buy. Because it looks like a great time to buy on that chart. But you zoom in, okay, that's the last 30 days. Does it look so good now? 30 days ago, we're at 30.75. We dropped down to 28.50. Now we're at 31. Well, that's the high of the 30-day period. That's the time to sell. But try it this way. Where's the bottom? 28.50. That's the lowest you could have paid for it, 28.50. And look where it is now, 30, 31. That's $3. Right around $3. So $3 increase on a $28 stock, that's over 10%. It's like 11 or 12%. So ask yourself the question. If you were in those shoes, if you bought it and it jumped up 12%, would you sell? I know I would. And I know a whole bunch of people in the audience, they would too. A 12% increase in 2 or 3 weeks? Hell yeah, why not? Because if you don't take your profit, the market maker will take it away from you. Because guess what? It's going to get to a point, it only takes 1 or 2 people to start selling off. And then it snowballs. And then it starts dropping until it finds the bottom. Okay, get to a bottom, people start buying, and it starts going up and up and up. Well, here it is now. So it can keep going, but that's not something I want to do. Okay, so think about it. If you like, I know, don't get me wrong, I like British Petroleum, but here it looks like 2 to 3 weeks would be a great time to jump into British Petroleum. Now, the reason I say that is because it's here. On the way back down, if you take the trajectory, and that gets complicated, here, here, here. So it'll take about 2 or 3 weeks before it's back down to the $28 area. So let's write British Petroleum, not next week, 2 weeks from now. Yeah, it's sitting there with Wells Fargo and Walmart. Because Wells Fargo and Walmart look great for 3 weeks from today, at this moment. So next week we'll take a look at them again and say, all right, yeah, maybe 3 weeks. All right, what else do we got? What else do we got? All right here. All right, so Dallas. I love it when people say money is hard to get and easy to spend. Not necessarily so. Now, the reason I say that is because, check this out. You're going to love this, Dallas. You're going to love this. I haven't done this in a while, so let's do this. Right there. Back to my website. Right here. Look at this. You're going to love this one. You ready? Now, this is what is called a weekly compound interest calculator. You ready? Now, I'm kind of curious. Dallas, okay, landscaper. Okay, Dallas, landscaper. Give me a rough idea how old you are. Just a rough idea. Let's see what we got. BBC, blah, blah, blah. Blah, blah. Wow, oh my goodness, I missed all these questions. I'll go back to here. Where are we? Right there. Okay. All right, anyway. I can't find it in there. So roughly, you're in landscaping. So let me give a guess. Let's say you're in your mid-30s. Okay, say 38. All right. So from 38 to, let's say 62, the same age as me. So 38 to 62, that's 24 years. 24 years. Okay? Think about this, Dallas. You ready? 24 years until you're 62. So let's say you want to retire at 62 and you're 38 now. That's 24 years, right? Okay. Weekly compound interest calculator. Now, here's just a wild thought. Wild thought. You ready? Let's get rid of that. All right. All right, you ready, Delos? Here we go. Let's throw in $1,000. Come on. You're an adult. You should be able to come up with $1,000. Now, what I want you to do is take $10. Stop buying that damn coffee. Make your coffee at home. Save $10 a week. $10 a week. That's it. $10 a week. All right? Okay, now I'm showing you the 1% strategy. So 1%. Let's get rid of that. 1%. You ready? $1,000. Deposit $10 a week. Get 1% return weekly. Now, remember, you're 38. Retire at 62. That's 24 years. So we're going to put 24 right here. 24. Now, do you want to venture a guess at $1,000 to start out with, $10 a week at 1% weekly over 24 years? Okay? What do you think it's going to be? Rough guess. Okay? Wait a minute. That's 100, 1,000, 10,000, 100,000, million, 10 million, 100 million. So $494 million. Starting out with $1,000, putting in $10 a week for 24 years. So if you can't come up with $10 a week and you're an adult, I feel bad for you. I really do, honestly. But then again, you got to put in 5, 10, 15 minutes every single day. Well, how's this for a thought? Let's say hypothetically it takes you 5, 10 minutes to stop brushing your teeth. Well, what is it going to cost for a new set of teeth when you're 62? I don't know. That was probably a crappy analogy. But it's a compound interest calculator. How long does it... Now, I'm going to try to get another calculator similar to this, but work it backwards. So let's say hypothetically you need $5,000 a month to live comfortably. Okay, so $5,000 to live comfortably, and how many years till you retire? Let's say it's 24 years. So if I want $5,000 a month, 24 years, how much do I have to put away every single week at 1% per week? That's the calculator I want to come up with. Okay, so the guy who did this calculator for me, I did all the math. I just didn't know how to do the what do you call it? The app. I couldn't figure that out myself. So I paid someone to do the app for me. But I gave him all the mathematical equations. So think of it this way. If you need $5,000 a month, or say you need $10,000 a month, well, how much do you need to put aside every single week in order to give you that amount of money to get what you need on a weekly basis so you don't have to go to work? We're all different. So I find it rather strange when an adult tells me he can't come up with $5 or $10 on a weekly basis. Quit smoking. Quit drinking. Make your food at home. Take it to work. Don't go out. There are ways of doing it. There's stories everywhere when someone, just They just kept, nickels, dimes over a lifetime. It adds up. It really does. So here's a one for you. Let's go all the way up here. Okay, let's start out with $10. Put in $0. Okay, so if we're starting with $10, just $10, and trade it every single, because you can do it, because they have what's called, hold on. Crap, what do they call it when you get a portion of a company? Some people call it slices. Some people call it, when you don't have a lot of money, you can buy a portion of a share. I forget the name of it. Fractional. Thank you. There are lots and lots of companies you can buy fractional shares. So if you know when a stock's going to be moving, which we already went over, so let's take a look at compound interest, just $10, $10 over a 24-year period. Okay, $10, see? Ending balance, total invested, $10, total earned interest. Okay, 100,000, 10,000, 100,000, million. So $10 compounded at 1% every single week for 24 years. Just $10 comes to $24 million. So dude, you cannot tell me and make me believe it that money's hard to come by. It's not that difficult. Okay? Do your shopping at yard sales. Do your shopping at Goodwill. There's a whole bunch of them around. Okay? You don't have to have filet mignon. Okay? Have oodles of noodles. The answers are there if you're willing to do it, which most people aren't, which is okay. It's your life. You can do whatever you want. Thank you. Someone over here came fractional also. Mike Mays, 1% compounding interest is the hard part. I have a lot of liquid, but no knowledge. Oh, Mikey, you're new here. Never seen that name before. You're new here. So the trading strategy I'm teaching, it's simple, it's safe, it's predictable, it's consistent. 1% a week is the goal. 1% a week is the goal. All right, so anyway, let's keep on going. So, landscape dude, I hope that makes sense to you. As hard as you think it is, it's really not that difficult. Go into your garage. Go into the attic. Go into the basement. That crap you're not using, you're not looking at, you're not broken shit, put it up online. Somebody wants. One man's trash is another man's treasure. Go to flea markets, buy something, put it up online, sell it. It's not that difficult. But it does take a commitment. And it does take time. Well, guess what? If you're 38 and you're going to retire at 62, you got 24 years. 24 hours a day. 365 days a year. 24 years. If you can't find 5, 10, 15 minutes a week or a month to figure out what you want your retirement to look like, I can't feel bad for you. I can't. I can, but I'm not going to. How's that? That's more honest, isn't it? I can feel bad for you, but I'm not going to. I don't like excuses. Now, my ex-wife, I didn't know she smoked. I didn't. Seriously, I didn't. We were dating, and it was about a year later I caught her smoking. So I didn't know you smoked, because smoking is a deal breaker for me. But after a year, we're already in love, and it's like, you can't dump them because I don't want to be the dick. But if I knew she smoked, we wouldn't have dated in the first place. But here's the thing, okay? I actually did the math, because, oh my God, 1983, shit, how long ago was that? That was like 40-something years ago. So anyway, holy cow, I don't want to feel old. Anyway, like 40 years ago, cigarettes were like $1.75, whatever they were. So we did the math. I said, this is what you're spending. Imagine what because at that time, it wasn't my money, her money, it was our money. So she's spending this money on cigarettes, and I disagree with it. I didn't smoke, I didn't drink, I didn't have any habits. Okay, so it's kind of weird. So my money's going to pay for her cigarettes, and I gotta live like shit because she wants to smoke. You add that all up and you carry it, because she still smokes to this day. And she doesn't realize how much money she puffed up in smoke over that period of time, and how much that could have been, how our life could have been different had she not. Anyway, besides the point. So yeah, I'm terribly sorry to go on that rant, but I have, holy shit, it's 11:20. I have no sympathy for those that have bad habits and complain about not having any money. Okay, life's not easy. It wasn't supposed to be easy. Nobody ever said life is going to be fair. Okay, so the answers are there. You just got to make the commitment to do it. See, making the decision to do it is easy. You can decide in a fraction of a second. You know what? I'm not going to do this anymore. Well, fraction of a second. Living with that decision, well, that takes a lifetime. Anyway, let's keep on going. What other questions do we have? Fractional shares. We got to come up with those good ones. Gotta love it. So Mike Mays, you're new here. Okay, I invite you. Send me your phone number. I personally will give you a call. We'll chat. We will, if you're interested. I give that to everybody. If you want to chat, somewhere, whatever channel you're on, there's a bio which gives you my information, my website, my email. Send me your phone number. I will personally, will give you a call. Funny thing, because like thousands of people come through this show every single night. Every single night. I got one phone number yesterday. One. Only one person wanted to talk. So if you add it up, it's like 30,000 people came through, but only one person wanted to have a conversation with me. I'm okay. Sir, may I ask a question? Why, of course you can. How much have you lost? This year, I had 3 losses. That's it, 3. Let's keep on going. I have Riley call option with a 350 strike price. Do I let it expire? Do I roll it over? Quantum antenna, all right, that option is going to expire worthless. Okay, I have no idea what you bought it at, so I couldn't really give you a good answer. Tyson, NVO thoughts. I have $83 call for tomorrow. It looks like a bullish trend to me. So Tyson, I'm not 100% sure because there's some details of that question missing. Did you buy that 83 call? Did you sell that 83 call? Did you buy the stock at 81 and sell the 83 call? Did you buy the stock at 86 and sell the 83 call? See, there's a lot of information that's missing. See, when I look at people's accounts, I want to be able to see what you buy it for, when did you buy it, did you sell a covered call against it, what did you sell, how much did you get for it, what's it doing now? There's a lot of questions. Because see, that song by Roger Stewart, every picture tells a story, don't it? I could take a look at, hold on a minute. Glasses. Get rid of that. That. This. Okay. You see that? The date I bought it, the stock symbol, how many I bought, the price I paid for it, the option that I sold, the expiration date, how much I collected, and where is it at now, and what does it mean? See, that tells me the whole story. What you have is not telling me the whole story. What did you buy it at? When did you buy it? What strike price did you sell? What did you collect? What kind of rate of return is that? Because see, I bought it at $24.70, and I sold the 24.50s and picked up 72 cents. So I made over 2% on that trade right there. All right, it's 11:26. Let's go to questions. No more of this. All right. Sir, may I ask a question? Blah, blah, blah. Zypher 1, you got it. Thank you. You're welcome. Oh, those are all done. Those are all done. Munchie. Granny Gut Grabber. Granny Gut Grabber. Gotta love that name. That's a cool name. Granny Gut Grabber. All right. 3M. She's a 3G. Not rated PG. She's 3G. She's Granny 3G. Gotta love that one. All right. So, what do we have over here? Okay, Ricardo, we are looked at MTB. It was a no. Money's hard. Okay, yeah. Dallas. Got that one. All right, what else do we have for questions here? We can't get any bigger than this. I wish I could get these bigger. No, I can't. Okay, MTB, we did that one. BBC. No time for that one. Which company do you trade with? Ken, I trade with Charles Schwab. I don't use Charles Schwab's trading platform. I used the Thinkorswim trading platform, which Charles Schwab bought from TD Ameritrade. I love BBC, very big position. Zhang Fu could be. Wait a minute, hold the phone. Hold the phone. Now, if any of you have been following for a while, we got a gentleman over here called Zhang Fu. And he says he likes this company. But didn't he last week says he doesn't buy dividend stocks, he only buys gold and silver? Well, now he's saying he has a big position in BBC. I'm kind of curious. Do you do gold and silver? Because that's what you said last week. You said, I only buy gold and silver. Well, you just admitted that you have a big position in BBC. So I'm kind of curious. What is it? Urban Forex Principle. Well, good evening to you too. Please, I need a partnership business in Forex. I have the skills but no capital. You do realize that's an oxymoron. Okay, you got skills but you got no money. Well, you got to find someone who believes in your skills to be able to do it. I know how to trade them on metal market. Okay, good for you. I don't do Forex. How does every contract you put up for bid get purchased? Uh-oh. Here you go. You ready? Who asked that question? All right, Mike. Does every contract you put up for bid get purchased? Hold on one second. All right. The question was, the bid, the ask. If I am buying, I got to pay the ask button. But considering I'm selling, I got the bid price. Now, you're missing a few key words in your question. There's two orders that you can do. One's called a market order and one's called a limit order. Now, a limit order, the market maker can decide whether or not he wants to fill it, but a market order is filled instantaneously. Because if the market maker, he's the person who does the buying and the selling. The market maker makes his money by what's called the spread. 32.60, 32.99. The difference between the two is the profit that the market maker makes. Now think of it this way. The corner store right around the corner from you, Quick Stop, 7-Eleven, Quickie Mart, whatever it is. Okay, we all have a corner store around the corner, okay? The closest store right there. Anyway, the owner of that store, he's the market maker, okay? He gets the farmer to bring him some milk and he pays $3 a gallon. And you come in, you want to buy a gallon of milk, he sells it to you for $3.50 a gallon. So the difference between what the store owner bought it for, $3, and what he sold it to you for, $3.50, that's his profit, the market maker. Now, you and I can't go to the farmer and buy milk. We have to go to the store to buy the milk at the store. That's the market maker. He creates the market. He built the store. He put the refrigerator in there. He did all that. So it's his offering, $32.60, the bid. If I do a limit order, he doesn't have to fill it. If I do a market order, I'll take it for what it is. It automatically gets filled. That's how it gets filled. Market order at the bid. Or bid, or with a limit order. All right. Can you explain how do you read the chart? I should focus on 1 week or 3 month chart. Laura, good evening. Hey, Bry-easy. That's interesting. Bry-easy. I think that's funny. I don't know which one you think is funny, but you know, I'm glad you think it's funny. All right, so Laura, are you ready? Chart reading. Chart reading. Oh, chart reading. Chart reading. Oh, let's get out of this one. Let's get out of there. Let's go right there. And here we go. Now, Laura, it does look a little confusing, doesn't it? Okay, that is a whole year. Okay, here, all the way to the right is today. All the way to the left is a year ago. Okay, now, this chart tells us the high right there, 37.39. It also tells us the low right there, 25.22. Most things you see on a chart are relatively simple. Okay, high, low, where was it a year ago, where is it now, and what's the motion of the ocean? Okay, up, down, up, down, up. That's the 1 year chart. It gives you the big picture. But the big picture is not going to do you any good. You want to get those binoculars on and you want to zoom in. What's it going to do next? Well, then you need to concentrate on this area over here. Okay? So, for me, I can't tell you what to do, but I'll tell you what I do. I look at the 1 year first. What I'm looking for in the 1 year is, you want to concentrate over here because this is where the action is. This is history. This is, this is 1 month back, 2 months back, 3 months back, 4 months back, all the way back to a year. So it's kind of important, but not hugely important. The important part is what's going on here. Now, I look at the 1 year chart first, give me an idea where the high is, where's the low, and what's the direction it's going. Once I figure that out, then I zoom into the 90 day. Now, what's going to happen on the 90 day as opposed to the 1 year chart? 3 right there. Okay? The 90 day chart. Okay? High, low, where was it, where is it, and what's the flow? Up, down, up, down, up. Well, that's easy to see. That's the last 3 months. Gives me an idea of what you and I are doing, because we are the buyers, we are the sellers. Okay? Up, down, the flow. Okay, as you can see, the flow is slowly going to the upside. All right, fine. So to figure out what I want to do next week, Krauser, that amount is not correct. Oh, reinvest the dividends. Okay, Krauser, can you explain to me why that amount is not correct? But while you're figuring out how to explain to me that it's not correct, let me finish up with Laura, okay? Now, Laura, considering I do weekly trading, I do buy on Monday and I sell on Friday, usually. I want to look at the last 30 days, because the last 30 days gives me a better idea of where it's going, okay? So the last 30 days would be right there. But I'm still looking at the exact same things. You ready? The high, the low, where was it, where is it, and what's it doing? Down, up, down, up. So this here tells me I don't want to jump in because I don't want to jump in when it's at the high. Okay? So that's how to read the charts for, the 1 year, the 90 day, and the 30 day. So I'm not sure if you know the difference between the candles, the high, the low, the open, the close, the volume, all that kind of nice stuff. I don't know if you know that. So, who was that one? Okay, Krauser, that amount is not correct. Now, I'm not quite sure which amount we're talking about. Okay? Temper coating, I have no idea what that means. Reinvest the dividends. Oh, yeah. Okay, okay, Nat, thank you for that. Why do you keep saying Casey is 1 year old? Okay, Dallas, I already told you that. I thought we were talking about Coney. Coney, Casey, same thing to me. I don't buy either one of them. So it's really irrelevant. David, we don't have enough time to look at that. Dallas, I know it's not a weekly, but you have to respect the week on Casey and the 10 year. Well, actually, Dallas, no, I don't. I don't have to do shit because it doesn't fit. I don't care how much you like Casey. And I don't want to be rude. Really, I don't. I don't really care how much you like Casey. I told you from the beginning, I have very strict rules about what I like. 1, 20 years or more of consistent profitability. 2, weekly options. Casey doesn't have that, so no. So we're sitting here arguing about something that's totally irrelevant because I really honestly don't care what you got to say about Casey. I'm not going to buy it because it just doesn't fit. And it's pretty simple. It don't fit, it's a no. I don't pretend to like something just because you like it. I'm going to tell you the truth. I don't like it because it's a monthly optionable stock and those numbers never work for me. You like it, fine. You do what you want. OMG, no one cannot make 1% a week. Oh, Mr. Wales. Now, Mr. Wales, I'm going to do you a favor. I'm going to give you the opportunity to tell me how wrong I am. I'm kind of curious. Now, you're new here, which is pretty much okay. So, Mr. Wales, let me see if I can explain something to you in a manner in which you'll understand it. Let's go back here. All right, so because we're looking at British Petroleum, so let's look at it. Because Mr. Wales thinks I'm FOS. Okay, so FOS. So, Mr. Wales, hypothetically speaking, Mr. Wales, if I buy British Petroleum tomorrow morning, well, the current price is $30.92. Can we agree on that? Well, I really don't care if you agree or not. That's what the price is. Okay? Now, the closest strike price to $31.92 is going to be the 31, which they don't have, which would be the 32 right there. Okay. So, I don't like that one, so I'm not even going to do it. So, let me find one that I do like. It makes it a little bit easier that way. Ooh, Hewlett-Packard. Let's try Hewlett-Packard for a second. HPQ. Okay, great. Hewlett-Packard. You ready, Mr. Wales? Hewlett-Packard. It's currently at $24.74. $24.74, the closest strike price to $24.74 is going to be the 25. Well, the 25, my friend, is going for a grand total of 27 cents a share. So, for the fun of it, let's try it out. You ready? We're going to do the 25 on Hewlett-Packard. Okay, get rid of that. Now, first thing I want to do is I want to change it from single down to covered call. All right? You still with me? Where did he go? Okay. All right, Mr. Wales? You still with me, right? I'm going to do a covered call, so let's do one. Okay, tra-la-la, right there, covered stock. And I said I wanted to do the 25. Well, the 25 is right here. Okay? 24.23. Let's buy it. 24.23, just one contract. Right there, at the market. There we go. I'll hit confirm and send, and here it is. Are you ready? Where did he go? Right there. Right, Mr. Wills, you ready? Ready, Mr. Wills? Here it comes. Buy one. Covered call, HPQ, Hewlett-Packard, 100, which is the weeklies, 20 June 25. That means this option expires at 4 p.m. next Friday. Not tomorrow, next Friday, the 20th of June, which is next Friday. The $25 call option against the Hewlett-Packard stock at the market to open to open. Now, if you don't understand what to open means, it means it's two trades in one. Okay? Number one, I'm buying the stock. Where the hell did he go? Okay, right there. Okay, two orders. Number one, I'm buying the stock to open. I'm selling the option. So I'm doing a stock trade, usually New York. I'm doing an option trade, usually Chicago. All in one trade. All right? Now, if you observe right here, my break-even point is $24.20. Well, the current price right now is $24.50. So I'm kind of safe. Right? Maximum profit. You paying attention? Maximum profit, $79.50. So, to find out the rate of return, in case you didn't know, we take the calculator, because that's what calculators do. All right, clear that out. Now, to get the rate of return, I got to switch chords here for a second. Here we go. To find the rate of return, Mr. Wales, we take the profit, $79.50. Okay, $79.50. Okay, we divide the profit, $79.50, by the cost of the trade, including commissions and fees, $2,421. So, for the fun of it, let's divide that by 24.21, and we come up with a grand total of, oh my goodness, that's 3.2%. It's not 1%, it's 3.2. All right, hold a second. You're going to love this one. Now, considering I have a margin account, I'm paying this much money right there. So let's see what rate of return I can get using margin. So, same thing. We're going to take the profit, $79.50, $79.50. I'm going to divide it by the margin requirement. The margin requirement, buying power effect, 1196. Okay, divided by 1196. Oh my goodness, you're right. I can't get 1.5% because this says 6.6% for 1 week. So, Mr. Wales, here's your opportunity to tell me that my math is wrong. Because the trade is a solid trade. Buy one covered call, Hewlett Packard at the market, sell the $25 call option against the stock, okay? Profit $79.50 per contract. Now, if it was a cash account, it would be $2,421. That was all cash. Well, that is 3.3%. However, considering this is a margin account, I'm not paying $2,400 of my money. I got $1,196 of my money. Well, the other part of the money is the market maker, not the market makers, the broker's money. Because margin is part my money, part someone else's money. So in case you're wondering, the margin account that I'm using is at 8%. So I'm borrowing $150,000 at 8% per year. But if I'm making 1% per week, that's over 52% a year. But 52% a year on money that I'm borrowing at 8%, so I'm walking away with a 48% profit on money that's not even mine. So, Mr. Wales, it would probably be a better idea if you do the math yourself before you condemn me, because this is the first time you've ever been here. Okay? But I'm waiting for your reply. Is my math incorrect? Is this trade a proper trade, or is that something I whipped up out of my ass? Most likely not. So I'm going to sit here and wait for your reply and see what you say to that one. Temper borrow $1 a day. Yeah, funny. Sandro, how do we get started? Just send me a link in the bio. No, send me your phone number in the bio. I'll give you a buzz. We'll chat. Michael, how are you doing today? Will the stock go down because Israel's attacking Iran? I don't do politics, brother. Don't even tell me that. Don't even get me into that one. Quantum mechanics. It's called a covered call. Thank you. George Collection. I contact you to learn more. I'll contact. Okay. So, Glengard. Yeah. In the bio, just my email's there and my information, how you get in touch with me is there. Okay, Silas, we looked at Procter & Gamble earlier today. Prince, Boeing drops. Okay. Laura, thank you. Laura, thank you. La Playa, 3M. We're not doing any more because it's past 11:30. I'm done at 11:30. Well, I'm just answering the questions now. Where else are you streaming? Mike, how are you today, Mike? How do you know the 79.50 is going to happen? I don't. Mike, what I'm looking at is, number one, to invest in a company that I believe in. Do I believe in Hewlett Packard? Well, of course I do. It's on my list. I like Hewlett Packard. Sorry. Okay. Now, do I know it's going to hit 79.50? No, I don't. But am I okay with buying it, selling a call every week? Because I want a return. Every single stock I own or I control, one or the other, I get a weekly call option premium every single week. If I don't, well, then I don't buy it. Hopefully it makes sense. Honestly, Stephanie. Come on, Stephanie. Honestly. It's an interesting name. Are you full out every week? Not nowadays. Because you got that Trump derangement syndrome going on. When Trump says something people don't agree with, they panic, sell their stocks, and it drops. Yeah, well, when that happened back in April, I got a margin call. Actually, I got 2 of them. So I had to handle it. So no, nowadays I'm in about 75%. Sometimes I push up to 80%, depending on, the flow of the news, because people are weird. All right, what else we got? Now, what happened to Mr. Wales? Okay, he had a valid question, a valid insult, but then he disappeared when I called him out. Doesn't that just figure? You say something, I don't agree with it, I prove you wrong, and then you disappear. Tuck your between your legs, Tuck your tail between your legs and take off. Okay, so anyway, Mike Mays. Where else am I streaming? Well, I got 3 YouTube channels, 2 TikTok channels, an Instagram channel, a live Zoom call channel, Rumble. What's that other one? I said 3 YouTube channels. Yeah, 2 TikTok channels, 3 YouTube channels. Rumble, LinkedIn, and I think a couple others. So I'm streaming to about 7 or 8 different channels. Okay, UGAR, we already looked at Procter & Gamble earlier. Okay. TikTok down. Not quite sure what that means. Delos, the strategy work, blah, blah, blah. Ryan, can you read this message? I want to see if this is pre-recorded. No. But you know what? It's not pre-recorded today. But tomorrow, if you watch it again tomorrow, well, then it would be pre-recorded. 10-minute trader, I mean. What do you mean? Mike, I'm not quite sure. Okay, yogurt, we're not doing any more because it's past 11:30. I'm just finishing up with the questions I already have. Now, I love Pepsi. We've been following Pepsi for the past few months, looking for the new bottom. Hold on a second. Take this out. Let's get out of that. 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 Let's get out of this. Let's get out of that. Put Pepsi right there. PEP. Okay? Look at what we're looking at the past couple of weeks. We can't seem to find the bottom. It's just going sideways. Yeah, I don't jump in when it's going sideways because it could go down, it could go up. I prefer a clear message, and Pepsi is not clear. Howdy, Johnny Ringo. Time to delete. You've been doing this so long, I don't understand your logic for using margin. Why not? It's free money. Think about it. If I could borrow money at 10, wait a minute, all right, so my margin money is at 8%. I have loans 10, 15, even 20%. I got no problem borrowing money at 20%. Why? Because I make 50% per year. Well, that's a 30% profit at 20%. And you have a misconception. Because however much money you think I have, I thank you, but I don't. Okay, because you think one thing in reality is something totally different. Okay? Let's keep going over here. Sneaky Orange, what car do you drive? I have 5 cars. How do I start investing? You just decide, and then you open up an account, you fund the account, and then you pick a good stock, and you pick a good trading strategy. DES, we're not going to look at that. Show us your portfolio. Sir Simmons, my portfolio, I got 3 of them online that I share every week. Hold on, what do we got? Here and there, and weekly trades for 2025. There you go, right there. That's every trade I've done so far in these 3 accounts. Now I have 7, but I only share 3 of them. You want to see? Right there. There you go. Time to delete. Okay. It's not just earning that matters. Projections also matter. Okay. How are you? Any love for Johnson & Johnson? Now, I love Johnson & Johnson, really do. Unfortunately, Johnson & Johnson, I have never bought it. The premium Johnson & Johnson gives is always less than 1%, so I never did it. After you collect the premium, do you want the stock to sell or not sell by the end of the week? So Dan the Man, I honestly really don't care. This is very challenging for some people to accept. I never buy something unless I'm okay with holding on to it. Okay, see, I will buy a stock and hold on to it, sell a covered call every single week until it hits my target price. Now, my target price is at a point where it stops giving me money like U.S. Steel this week. So I bought U.S. Steel at 41, now it's at 53. And if I try to roll it forward into next week, they're not giving me 1%. So it's time to let it go. That's it. See, I will hold it. If it keeps giving me 1% every single week, I will hold it and I will roll it every single week. But there comes a point where the stock goes up so much that rolling it forward, you can't get 1%. Okay? So it's always going to, always going to be about the numbers. Is Kohl's good to hold long? Granny, the longest I've ever held anything, well, that's actually Kohl's, because I've had Kohl's for a whole year, because every single week it gives me a nice return every single week. But prior to that, the longest I've ever held anything was 9 months. Let's keep on going. And sometimes more important than earnings. It's not just the earnings that matters. Projection also matters. No, not really. I'm going to disagree. So we can agree to disagree. All right? So if I buy a stock at $10 and it goes up to $10.01, I'm perfectly happy. You know why? Because if I buy it at $10, I'm going to sell the covered call at $10. And if it's at $10.01 come Friday, I will get all my money back, and then next week I'll try something else. Or I will roll it over if they'll give me another 1%. Okay, so rule number 1, never buy something you don't want to hold long term. Okay, it has nothing to do, well, does the spread and slippage affect your 1%? No. Time to delete. Bads. It's not just, okay, yeah, we already did that one. I want you to bounce on, okay. King Tahaka. Cool. APLD, check with me next week. It says Kohl's pays quarterly. Yes, I'm aware of that. Mike. When it comes to Riley, you're unhappy to own too much of Riley, and when you claimed you made 5-6%, why the discrepancy? Well, let me think. That's a good question. No, I just said I own too much of it. Okay, see, I don't like to have more than a certain amount. Okay, so let's say hypothetically, I got $100,000 in my account. Okay, 5 trades, 20,000, 20,000, 20,000, 20,000. Okay, so with my Riley, I got 20,000, 15,000, 15,000, 15,000, then 50,000. So I got a little bit more Riley than I should. Don't get me wrong, it still gives me a nice return every week. But I try to keep my trades even. Sometimes, after you do it for a long period of time and you keep rolling different things, it's hard to keep all of them the same. That's all I meant by that. You need to clean the lens on YouTube. Which one? I got 3 YouTube channels. Which one? Topic of discussion. James, I told you I'd be back. How many solid stocks or stocks you would recommend to get? And share of those solid stocks would you have to buy to receive $5,000 in monthly dividends? Uh-oh, low power over there. That's not right. Let's switch. I need new power cord. This is silly. It's funny because the phones don't move at all. I use the phones as cameras. Okay, so I got 6 iPhones. This is one channel. Simple. Hit the channel, go live. Hit the channel, go live. It's so much easier. If I learned how to use the software, it would be much easier. But the power cords, for some strange reason, they just die after a couple of months. No rhyme or reason. They just sit there. All right, so anyway, topic of discussion. I would love to give you an answer to that question. However, it would be disingenuous of me because I know absolutely nothing about you. Okay, I have no idea what kind of skills you have. I have no idea what kind of experience you have. I have no idea what your risk factors are. I have no idea how old you are. So a lot of unanswered questions need to be answered in order for me to give you any kind of answer to a question like that. I hope you respect that because I don't want to tell you something not knowing anything about you. Okay, it wouldn't be right for me to tell you anything. Mike, is there a fee for creating these options with your margin money? Well, every single trade you make has a fee that goes along with it. That's why when I say, hold on, let's go back to it. Hold it, I'm coming up with that question. Okay? You see this right here? Cost of trade, including commissions and fees. Okay? Here's the profit right here. Cost of trade, including commissions and fees. It's already there. So yeah, every time you do a trade, it's going to cost you something. Every time you hit this button here that says send, then it goes to the market maker and you agreed to that. You got that one? Cool. All right. Next. To make $1,000 a week at 1%, you need at least $100,000. Yep. Okay. So, but think about it. I'm 62. I've been working since 1973. Not 62. I'm going to be 62. I've been working since 1973. So $5 here, $10 here, $100 there, $500 there. Over a 45-year period of time, yeah, I've got over 100 grand. Okay? Fractional shares, thank you, thank you, thank you. That is if you're alive in 20 years. I like to think I'll be alive in 20 years. Quitting smoking cigarettes is one of the hardest things to do. No, it ain't. See, making the decision is the easiest thing to do. Living with your decision, that's the hard part. Okay? It's very, it boggles my mind. It really does. Because, see, everybody who smokes, it's hard to stop smoking. No, it's not hard to stop smoking. Because, see, here's the thing. I don't smoke. Guess what? In order for you to smoke, you have to actually stop what you're doing, go find your cigarettes, pick up the cigarette, light it, and then when you take a drag at it, you got to find a place to put those ashes. And then when you're done, you got to find a place to put your cigarette butt. Well, you actually have to do something in order to smoke. It's easier to do nothing than it is to smoke, because the act of smoking takes energy, takes momentum. You have to go out and buy the cigarettes. Okay, you got to find a place where you can smoke, and then you got to take time out of your day to have a smoke. So don't tell me it's difficult. Just tell me you don't want to do it. Okay, they specifically make it addictive. Simple. Just quit. I quit. And it's easy for me to say because I've never done it. Well, actually, I did. I tried it twice. Take a drag, and I could gag. I was like, what the hell are you thinking smoking it? Anyway, first time. Nobody ever, as far as I know, nobody ever took a cigarette. Oh, wow, this is great. No, first cigarette's always coughing and hacking and choking. What the hell's wrong with you? Anyway, but then they continue to do it, even though you know it's a waste of money and it's not good for your health. It boggles my mind. You know it's not good for you. You know it's expensive. You know it's not healthy, but yet you do it anyway. You do it. It's an activity that you actually have to do it. An activity. You have to take energy to go and smoke. Well, it's easier to go to not do anything. I could just sit and do nothing and spend less energy than you do you smoke, because it's an activity. Never mind. Anyway, let's keep on going. Ed, first time seeing your program. Excellent. What is the name of the company and phone number? Thank you. All the information's in the bio, Ed. That's an awfully large cup of coffee. Actually, no, it's not. It's just your regular average cup. See, it looks big, but back here, it looks small. See, it's a small cup of coffee, but the closer I bring it to the camera, it just looks bigger. Okay. Dusty! Hey, James and everyone else, do you have any tips or advice or stock suggestions for a new investor who is completely green in the stock market investment world? Okay, Dusty, what I'm going to tell you is like something I tell everyone else. Never buy something you don't understand. It's really not that difficult. You jump in a car, you drive down the road. Guess what? Ford, great company. General Motors, great company. Tesla, another great company. As you're driving down the street, gas station, British Petroleum, great company. ExxonMobil, another good company. Wait a second, there's Walmart right there. Hey, Walmart. Yeah, another good company. Home Depot. Hey, Home Depot. I went in there and buy some 2x4s. Yeah, good company. You know a lot more than you think you know. Okay? Never buy something you don't know and you don't understand. Okay, Sally Seashells. You know who they are? No. Well, then don't buy them. Okay? Peach Pink Slippers. Do you know that company? No. Well, then don't buy it. It's actually that simple. Never buy something you don't understand. If you don't understand it, don't buy it. Silly. Such a silly thing to say, because if you don't understand it, don't buy it. Why would you buy something you don't understand? And then second, never buy something that's not profitable. Well, how do you find that out? You ask. Matthew 24, written over 2,000 years ago. Ask and you shall receive. It's not that difficult. Ian, how long did it take you to become profitable? Oh, that's a great question. See, I've been trading for over 25 years. All right. Now, it wasn't until 2008 when my daughter said, "Hey, Dad, what are you doing? Can you teach me?" Well, I had to come up with that strategy. But ever since I came up with the strategy for her, well, it's been profitable, every single year. It was getting to that point. So I'd say about 5 years, So, the interesting thing is, once you find someone who has been successful, and it's a simple, duplicatable strategy, which is the reason why we're doing this, find that straight. You can avoid the 5 years of losses that I had. Now, I made more money in 1 month than most people make in a year. I've also lost more money in a week than most people make in a year. That was uncomfortable. But you learn through your mistakes. That's why I tell everybody who wants to do this is paper trade first. Thinkorswim has a paper trading account. It's almost the exact same. Okay? When I say almost the exact same, the letters here that are green, paper trading account, they're brown. Okay? That's the only difference. Other than that, the numbers are the same. Bones. I won't be able to write calls now until my stock rebounds after today. Well, Bones, that's not totally true. Because even if your stock dropped, you can still lower your strike price, but not too low to where the action is. I'll give you for instance. If you buy something at $100, you can sell the covered call at 100. Well, what if the stock dropped down to 60? Well, you can't sell the 100s because there's no value there. You could sell the 60s because there's a lot of value there. But if you get called out at 60, you'd lose. So look at the 65s or the 70s or the 75s. Sell something far enough away from where the action is so you have some cash flow coming in, but not too close where you might be at risk of losing. But watch it every day. Yeah, baby, in the house. How's it going there, dude? Okay, a second. I'm almost done with my tea. Now, I'm supposed to be done at 11:30, so we are basically done with all these guys over here. Got this last one right here. Holy cow, a lot of these questions. Can you say good night? Chill, Logan. Who said that? J. Tip. MLGO is going to explain. I doubt it. Selling covered calls on margin. Yep, that's what I'm doing. Now, I always tell people, don't do margin. Don't borrow money and trade someone else's money until you know what you're doing and you can be successful at it. Can you sell covered calls on SPY and Qs? Yes, you can. I don't do it, but you can do it. Can you say goodnight, Cam? Guys, okay, thank you. I'm from Iran. People in Iran, okay. I'm not even going to bother with. I don't do that. What do you call that? I don't do politics, so don't do that. Why do you have 7 different accounts? Because I don't trust the government. FDIC. FDCI, MINS. No idea. House tour. I have no idea what that means. Let's see how a successful trader lives. Oh, don't be bitch. Hey, Nuclear Thunder, how are you? Matt, can you say happy birthday to my friend Nick? Best car, yes. Doing well for 62. Thank you. Oh, look at this. We're done. This is the last of the questions. I quit after 10 years. Cool beans. James, thanks for your time, sir. You're welcome, Jamar. Elliot, sell. Okay, Sacred. There are, okay. Thank you. Gotcha. All done there. All righty. So, we answered all the questions. You guys have a great day, and we will see you again Sunday night. Okay? I don't do Friday nights. I don't do Saturdays. Last year, 7 days a week. Okay, on 359 days without missing a day. All right. Guys, have a great day. You guys over here, see you guys tomorrow. Remember, tomorrow at 2:30. You guys have a great night and see you tomorrow. And now, the end is near, and so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which I'm certain that went the wrong way. I've lived a life that's full. I traveled each